This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I didn't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, and Lisa Mateo. Lisa Mateo back, I say.
Absolutely.
It's an improvement already over
Yes.
what we had to do. John Tucker filling in yesterday, doing an absolutely spectacular job. Paul, adrenaline rush. It's almost a normal day.
Yep.
I mean, this is the first time in ages where it's like, here's
Exactly.
the data,
I mean, you know, the futures
news.
are pretty much unchanged here, Tom. I mean, the bond market's pretty steady, a little bit of lift in the 10-year Treasury, but a pretty steady little futures market right here this morning.
Good to be busy morning. 3 hours of Bloomberg surveillance. Sweeney and Steele, 10 to 12, and then at 12 noon, Georgia Tech Duke. Is that right?
That's what I'm hearing.
That's what I hear.
That's what.
How do you do that? Do you bring it right into the studio? And
Exactly.
Just sit there for the
we'll
tip
sit
off?
there. Yeah, exactly. It's on my phone somewhere.
It's on the phone somewhere. It's going to be a lot of fun to watch March Madness this year. It's a lot of fun to watch the data, -3. It's flat on the market, but the VIX comes in for global Wall Street. You sum up Bloomberg Launchpad across equities, bonds, currencies, commodities, and the fact is the VIX was at 28-ish, on its way to 30, didn't get there, 24.26. I think that is, I would suggest, I should say, that is telling this morning. Bloomberg surveillance this morning, we're brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. And we particularly thank Commonwealth for their commitment to our economics. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got little movement in futures this morning. This is as a possible government shutdown kind of adds to that stress of a rising tariff war, higher unemployment rate, and federal workforce job cuts. So we'll get to NASDAQ futures down about 41 points, Dow futures down about 9 points, S&P futures down about 4. We have the 2-year yield, 3.99%. That's up 1 basis point. The yield on the 10-year, 4.33%, and that's up 2 basis points. The Bloomberg Dollar Spot Index up about 0.1%. And after a softer than expected CPI print yesterday, today we move on to the Producer Price Index and also initial jobless claim. That's all coming out at 8:30 Wall Street time. This morning, shares of Intel, they're higher. This is after a change in leadership. They're up about 11%. Industry veteran Lip-Bu Tan has been named the new CEO to succeed Pat Gelsinger. And shares of Adobe, they're down about 4%. That's after a disappointing outlook for revenue growth in the current quarter. And then we have shares of American Eagle Outfitters. They're off about 8%, and that's after issuing a weak forecast. More earnings today. We get those from Williams-Sonoma and Dollar General. We'll have more on that in just a bit. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Yesterday, I constructed my chart of the year. It's March, and I already got a chart of the year. It's Nick Bloom out at Stanford, the Baker Bloom Davis Uncertainty Index. Expert on uncertainty and the distinctions to risk is Geoffrey Yu. We're thrilled that he could join us this morning, of course, with BNY Wealth. He is Senior EMEA Strategist. Jeff, how do you identify the uncertainty right now?
Well, it depends which asset class you are asking about, right? So if I look at foreign exchange options, for example, yes, some uncertainty in the front end, judging by implied volatility, but going further down the curve doesn't look like it, right? So a lot of front end uncertainty, but the market seems to think that stuff will sort itself out. I'm not so sure about that.
So, Geoffrey, I mean, you know, we've been talking about the strength of the U.S. exceptionalism over the last, I don't know, year, 2 years here, and that's been reflected in a strong dollar. What's the word order look like right now when you look at the currency markets? Where is the opportunity?
Well, the biggest repricing certainly has been in the euro, and I would add, some other low-yielding European exporter currencies, like the Swedish krona, Czech koruna, Swiss franc, for example, Denmark even. They're going to benefit, from any restructuring in the eurozone and a big fiscal push. So that's where the opportunities is. And because the dollar has enjoyed such a large rate differential over these currencies, people are happy to sit on long US dollars and sit on the carry trade. But now with Fed easing being priced back in, clients are not so sure. So these carry trades, these hedges, they are being unwound. So as much as I'd like to call the top in the euro right now, given it's gone against my view, looking at the size of those hedges, I'm still not so certain.
So in the euro here, I mean, again, several weeks ago, we saw Germany make a really big pivot there and talk about investing in their infrastructure, investing in their military, suggesting a little bit of well, actually a lot of a change in their bias. Is there still upside to the euro? We were trying to get the euro to parity for Tom Keene, but that's not happening.
So, I would that was my target for last year and early this year. And given what the ECB has said as well about inflation, probably not likely to falling back to target in the near future, that is going to be difficult. I still think we end the year below where we are right now, close to 105, rather than 115 or so. The proof will be in the delivery, and this is going to take a long time. But the outlook is positive, and I would concede that.
Geoffrey Yu, I'm hearing from a lot of other people what I'm hearing from you. Somewhere over the horizon, there's a bet that everything calms down. Maybe we normalize and get back to, the stock market gets a bid on it. Everything's fine as well. My problem is I'm reading the Globe and Mail up in Toronto or Le Monde in Paris, and I see massive tariff tension. How do you fold the politics and the Trump politics into your finance analysis?
So going back to your earlier point, yes, it stabilizes, but it won't stabilize at the level that we were at, right? So euro dollar trend stabilization, neutral rates, it's not going to be back at parity. It's not going to be based on growth differentials that we thought were the case in the past. Right. Chinese equity markets, people rendered uninvestable back in the day, not so much in the future. So Canada, what's going to be the nature of the economy? So yes, we will stabilize, but at a different level, subject to the changes that are taking place right now.
Quantify off parity on euro. Stabilization, I don't want to pin you down here, it's unfair, but is the new parity a 105 or a 110?
So we look at exchange rate in real terms, right? So you look at growth differentials and you look at inflation differentials. It will be higher compared to where we were, because if this works in Europe, and that is a big if, then trend growth will be higher. Why? Because productivity will be higher. The competitiveness that Draghi called for last year, that letter called for last year, that may actually deliver. Demographics will be harder, but if productivity is higher, then trend growth will be higher. And that means a higher real euro.
Paul, should we get Geoff Yu in trouble with compliance today?
Yeah,
let's do it. Geoff Yu, this is way off the remit, but you're so good at this, we're going to ask. Mario Draghi of Italy was a technocrat. Is Mark Carney of Ottawa a technocrat?
So that would be the market characterization, but let's see what else he can do. You can be a technocrat and also a political leader. Who says these two are exclusive? And Mario Draghi was a political leader as well. So he led Italy for those 2 years, but of course, under a technocratic mandate. So let's wait for the elections to see what the manifesto from the Liberal Party will be, what kind of a mandate he will run out under. I assume be quite different compared to what Mario Draghi ran under, but ultimately, can he deliver for the Canadian economy? Can he, a la the German terms, restructure the Canadian economy so that it is less perhaps dependent on two-way trade south of the border? That will be the challenge for him.
Geoffrey, just in a world of that we're all experiencing here over the last couple of months and over the last several weeks in particular, in your world, when you talk to your clients, are they looking for safety? Are they looking for just opportunities? What are they doing here in this world where nobody seems to know what's going to happen the next minute, the next hour?
So again, those two are not mutually exclusive, right? So some of the safety names potentially are the opportunities as well. So certainly, and we all know, and it's showing up in our flow data, there has been a wide gap in US equity holdings versus the rest of the world. So we anticipated that to converge, maybe not so speedily over the last few weeks or so, but that is happening. So there's a lot of cash on the sidelines right now. Where will that go? Do I put it in Asia with the China theme, the AI theme, or do I go in the Euro reinvestment theme? But China's openly saying there is an inflation issue. issue, a demand issue. So you've got to pick your sectors very, very carefully. So the opportunity and safety, I would add, in the places where it's basically high earnings or high earnings growth potentially, and also less exposure to what's going on right now, and also based on domestic public investment. Those are the sectors I want to be in.
We start strong today on Bloomberg Surveillance. We do it with Geoffrey Yu of BNY. Well, thrilled that he could be with us. We welcome all of you on your commute across the nation, across Canada. Good morning on Apple CarPlay, Android Auto, on YouTube. Paul and I absolutely humbled by the growth out on Bloomberg Podcasts. Subscribe to Bloomberg Podcasts. And, you know, we were just absolutely thrilled by it. In a particular good morning, I just featured Mumbai.
You did?
And the build on here, Ray YouTube, I have an advisor on this.
You do?
You know,
okay,
they said, Tom, you're such a fossil, you got to have an advisor. So I have Ray YouTube, and Ray YouTube says, India is happening. So good morning, good evening, I should say, in India. Geoffrey Yu with us with BNY Wealth. Jeff, I look at China in the sort of, to me, if I was speaking with President Trump and his fierce advisors, I would say expect the unexpected. And if we export Chinese deflation or massive significant disinflation, are we undergaming where inflation is going to be in 2, 3, 4 years?
So that's where the Chinese growth strategy up ahead is going to be really interesting. I would say, firstly, we're going to be seeing less of China exporting disinflation, right? Because inflation is expected to pick up. But secondly, this fiscal push, the deficit at 4%, where is it going to be concentrated? In the past, it's infrastructure and real estate. It's going to help commodities. That's not going to be the case this time around. Let's help the household, the consumer. If the household consumption picks up, then again, consumer staples or even the consumer discretionary, those are the areas where we can see reflation as well. This was expected in 2023, 24 when China reopened. Didn't really happen, but now better late than never could that happen. So I would say less deflation for sure, but can it be inflationary? Can it drive earnings upside in global consumer discretionary exposed to China? That is going to be the big challenge.
Jeffrey, I mean, you know, I look at Alibaba as my personal proxy for investor appetite for China.
Is this a stockbroker called out?
It might be. It might be, exactly. I kind of just feel like when Alibaba, however Alibaba trades, that's kind of a good proxy for how the world's viewing investment opportunities in China. It's up 60% this year. What's changed in China, if anything, to bring it back to the forefront for maybe investors to see as an option here?
Right. So growth, we go back to the growth element, and for companies, what matters, right? Margin. Can there be margin expansion? So can AI deliver the productivity growth and the competitiveness gains that will really boost earnings, via margin expansion? And I think that's what's being priced, right now. But I have to pivot back to the household. Ultimately, the final demand has to come from the household, maybe directly from the government, but otherwise, but given these Chinese consumer communication services companies, they really are in every aspect of household consumption. So that's where we hope the growth can be. Can it translate in higher earnings and employment? I think that's what the government is hoping for. It's early days after the MPC. So far, there's money on the table. And I would stress participation from international investors is very, very light right now. We're seeing that in our data. We're seeing it in official data as well. So there is an opportunity there in terms of allocations, if you believe in the story.
Jeff, when you were at LSE, there was a basic statement on Germany is some form of to be brought about a non-American experiment. All of a sudden, it sounds like they're goosing nominal GDP. Do you actually believe Germany politically, and here's the key word, folks, culturally is ready for a more Anglo-American economy?
Right. I think it is, but let's just say what prompted this cultural change. Was it something out of their own volition or something from outside? I think that is a political debate perhaps worth having. But then again, looking at Europe in general, if it often does respond better to external challenges, and I think we are seeing that play out this time around as well. So yes, there is a change. There is a change, at least in the political culture, in the dynamic, and we're seeing that with Merz.
One final question. What are you hearing from BNY clients?
So BNY clients are, again, looking for opportunities, safe opportunities, as stated earlier. So they are looking at their overall exposures. I wouldn't say there's too much conviction in one direction, or the other, and we're seeing that in our underlying flows right now. But to start off with, certainly we are seeing some dollar positions, some dollar longs being taken off, or reducing their hedges on overseas assets is the next step. Mass rotation out of the US into other markets. We're not seeing that yet. Home buyers are strong. Take Europe, for example. It's being driven by European investors, not global investors. Will that change? I think that's the asset allocation story for the year.
Geoffrey Yu with BNY. Paul, that's what we call a 7 a.m. call.
Exactly.
On the street. That's
the BNY offices in London, they're about a 5-minute walk from Bloomberg. I think next time Geoffrey can walk over to the Bloomberg. What do you think? Get him in studio, do all that.
Yeah,
he's right around the corner.
Yeah. Geoffrey Yu, thank you so much getting us started here. We got a lot of other good conversations today as well. Lakshman Achathan will be with us.
Oh, yeah.
That's a good thing.
In studio.
And we'll look at the cycles here, and particularly what he observes in the American consumer, and also that business investment in America. Futures deteriorate ever so slightly. Futures -8. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, the deadline is ticking to a possible government shutdown. Senate Democratic leader Chuck Schumer says his party will block a Republican spending bill to keep agencies open. Bloomberg's Amy Morris has the latest from Washington.
Senator Schumer told his colleagues on the Senate floor Republicans just don't have the votes they need.
Republicans do not have the votes in the Senate to invoke cloture on the House CR. Our caucus is unified on a clean April 11th CR that will keep the government open and give Congress time to negotiate bipartisan legislation that can pass.
In the Senate, 60 votes are necessary to cut off procedural hurdles, and Republicans only have 53. This significantly raises the chances of a government shutdown at the end of this week. In Washington, Amy Morris, Bloomberg Radio.
President Donald Trump vows to take back what he says was stolen wealth as 25% tariffs on steel and aluminum imports go into effect. Trump says the U.S. will respond to the European Union's countermeasures against his new tariffs, raising the risk of further escalation in his global trade war.
Whatever it is, it doesn't even matter what it is. If they charge us 25 or 20% or 10% or 2% or 200%, then that's what we're charging them.
The president spoke while greeting the Irish leader at the White House yesterday. An aide to President Vladimir Putin claims Russia does not want a temporary ceasefire. It comes as Ukraine consented to a 30-day ceasefire proposal. Putin has repeatedly ruled out a temporary break in hostilities, saying it would only help Ukraine and its Western allies to replenish their arsenals. In California, heavy rain has led to evacuation orders and road closures in areas impacted by the Palisades fire, amid fears of mudslides and debris flow. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Greatly appreciate that this morning. March Madness, is there an automatic Ivy League slot?
Actually, now they have a tournament, like a conference tournament, so they get some of that excitement.
Yale 13-1.
Yep.
I mean, rocking it. Columbia, reciprocal 1-13.
Yeah.
Good morning, Morningside Heights. Wait till next year.
Yeah.
As well. Yale, Cornell, and Princeton actually a conference better than, or overall, I should say, better than Cornell. 17-10. You attended senior night.
I did.
At Princeton.
Yeah,
were tears shed? Is it?
This past Saturday, it was Penn at Princeton. They're the big rivalries. That's a big rivalry, Penn-Princeton. It was at Princeton, so we went to that game on Saturday afternoon. It was senior day, so they had 4 seniors. And what's interesting about the senior day there, and I've been to a million senior days at Duke where they just, when the seniors, they're introduced, their parents come out, they talk about
they tell them how much their name, image, and likeness is?
Exactly. So, they talk about their
and he made $412,000.
Exactly. So, but this one was very interesting because in addition to talking about how they performed on the court during their career, it was upon graduation, such and such person is going to go to one case BlackRock, another case Goldman Sachs, another case med school at Columbia, another case law school at Yale. So it's just extraordinary. It's a little bit different there in the Ivy League.
It's a little different than the ACC.
But it was a great game, great competition there. It's great seeing an Ivy League basketball. So it was fun. But anyway, so the Ivy League now has their little conference tournament, just like everybody else.
Whoever goes, goes.
Yep. I think it's. I'm not sure where I think it might. Actually, I'm not sure where it is this year, but that'll be good. So we'll see, and they'll put somebody into the big dance, and you never know.
Team coverage here at March Madness. We're having a lot of fun with it. And for those of you around the nation, Paul's particularly fired up with St. John's and the resurrection. Is it right for me to say the resurrection of the Big East?
Complete.
Is that the right
Yeah, I think so.
phrase?
I mean, we've had UConn win the last 2 national championships from out of the Big East, so that's great. And then, of course, St. John's is a story. And Coach Pitino, he's everywhere. He's on late night television. He's all over the place now. So I think it's good for St. John's.
They
It's good
play
for the Big
Butler
East.
today.
Okay.
But you're going to be watching Georgia Tech Duke.
Yeah, we'll see how that goes. Yep.
Yeah. Oh, come on, please.
Absolutely.
See how it goes? Did they beat them by 30 or 40
Well, Callie
points?
Cox, our good friend from Ritholtz Wealth Management yesterday, she had a big win for her UNC Tar Heels, so
We'll see.
they're still in it.
Sliding into March Madness. The filling out. Michael Barr and I, we go to the Subway down the street, pour ourselves a cool Budweiser, and we fill out our brackets together. And what's really good is by the time we get to the West, we're 3 Budweisers in.
Is Belle Isle Tech in this?
Last year, I just got, good morning to TV News, or they do a ranking here of it. And I mean, Scarlet Fu, she's a beast.
Oh, yeah.
She's
on top of
like
it.
serious about it. It's all. Anyways, we'll fill out the bracket. For those of you, the terminal BRKT go as well. On YouTube from New York, this is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. All right, we've got futures lower right now. This is concerns over whether lawmakers in Washington will avoid a government shutdown. They're kind of adding to that uncertainty around the outlook of the economy. So we have NASDAQ futures down 0.3%, S&P futures down 0.2%, and Dow futures down 0.1%. The 2-year yield, 4.00%. That's up 1 basis point. The yield on the 10-year, 4.33%. That's up 2 basis points. To commodities, oil, we'll start with Brent crude, down 0.2%, $70 a barrel. This is all after the IEA said global trade tensions will help weigh on oil demand. We go to gold. COMEX gold, $2,955 an ounce, up about 0.2%. The Bloomberg Dollar Spot Index is little changed. We have a few companies making news this morning. We'll start with Deutsche Bank. It raised its bonus pool to $2.7 billion in 2024. That was the most in a decade. That's a 20% increase. It follows that strong performance in deals and trading. Then sources say HSBC placing some of its investment bankers on short-term retention agreements, and they're going to cut many of its vice chair roles on top of that. And finally, Reuters reporting Citigroup plans to hire thousands of staff in tech. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. I'm Lisa Mateo. That is your Bloomberg Business Flash.
That was brilliant. Can you repeat that in the next half hour? That was a snapshot of the March Madness of Wall Street. Paul, Sri, we'll get to Sri in a moment. This is really a huge deal, Paul. Everybody talks. The managers get out and they talk financial responsibility. We're doing this. If they don't pay the people, they leave. That's what it's about.
That's right. It's a services industry, Tom, as you well know, and that your assets walk out the door every day. So You got to just pay what the market demands, I
In
guess.
umpteen years, Lisa, those 3 stories back to back was absolute genius.
Nothing's changed.
When you
Nothing's
see
changed.
Shonali Basak on the phone talking to Wall Street like she does, that's the idiocy she hears. Well, we're really cutting back, but we got to pay people. Speaking of excellence, let's get to it right now. Sri Kochakvidian joins us now, senior research economist at Aberdeen and Investments. They're going from Aberdeen, ABRDN. They're coming back out to Aberdeen again, which is a good and beautiful thing. Sri, what are you writing now about the European economy? There's lots of talk about European politics and tariffs and this. How close is Europe to recession?
I think the economy momentum had been slowing, and the economy was pretty fragile. But I think the recent events that we've seen in terms of the German announcement and the fiscal stimulus that's about to be approved, I think that is very, very meaningful. There are a few headwinds. They are still voting. There has been a vote. There is a vote today in the Bundestag, and there will be another vote at the Bundesrat as well. So it's not a done deal, and we still need to figure out the contours of the final package. But it is likely to be quite a meaningful shift in that structural trend for Germany.
Through your lens from Scotland, all the heritage of Aberdeen and Standard Life, what does the U.S. look like right now? What are you writing about into the weekend?
Well, all eyes on the headlines. As you say, it's the tariff headlines that are really moving markets at the moment. But also, we had inflation yesterday. I've had a lot of questions about the CPI data. I think today's PPI data, which is, I think, in an hour's time, that will give us another signal about core PCE. It will tell us where the services inflation in core PCE is heading. And that is important. We did see a market move initially in the wake of yesterday's softer CPI. But really, if we can dissect the details of core goods and autos, etc. But really, the outlook for the next few months will be determined by the tariffs. And that's what the Fed is trying to focus on, yes.
Paul Sweeney, Mike McKee suggesting PPI arguably more important than CPI yesterday.
You said that. Sri, just when you talk to your European and UK clients, how are they viewing the U.S. Right now as it relates to its economy in terms of trade wars across the globe? What does that mean for just global growth, do you think?
Yes, I think at the moment, the data is still quite resilient in the US. We haven't seen the impact of tariffs because it hasn't been implemented yet. I mean, obviously, we just have the aluminium and steel announcement. We have April the 2nd is a key date that clients are focusing on. And the question is, for the outlook for the global economy, we can only look at scenarios, and the scenarios are based upon how will the tariffs play out? So are these tariffs a negotiation tool in which they are temporary, or are they more persistent? And that will determine the outlook for inflation and for growth going forward. It will actually determine the supply chain dynamics as well, longer term, and how these trade routes will then start to reshuffle and settle going forward. So really, it's a case of if we just have reciprocal tariffs with some carve-outs and then some additional tariffs on China, then we're looking at average weighted tariffs for the US in the region of 9%, which is much less than the severe case scenario that we're looking at, where if we pull together all the headlines that we've seen from Trump, all of the announcements, including BAT, and some non-tariff trade barriers, then we have something that goes back to the 1930s in the region of over 20% in terms of average weighted tariffs. And that's quite meaningful for that growth outlook. So really, we need to be thinking in terms of those scenarios rather than trying to determine a number for inflation just yet.
Sri, talk to us about the European Central Bank. It's been pretty aggressive to date. How do you expect it to move through the remainder of the year?
We are looking for another couple of rate cuts, actually. They have been quite consistent in terms of that move back towards a more neutral rate of policy. So we're expecting them to move back towards 2%. So at the moment, we have April and September penciled in, but there are risks around this outlook. And again, those risks are in both directions. And this really looks at a number of moving parts, which will be how quickly are the German fiscal measures likely to be implemented. That could take some time to really filter through. And then you have that negative headlines coming from the tariff story. So we are seeing some retaliation from Europe as well. So again, but two-sided risks for the ECB as well.
Sri, thanks so much. Too short a visit. Let's do it longer next time. Sri Kochagovigindan with us with Aberdeen this morning. Paul, two stories we haven't talked about. I've been remiss on this, folks. It's 7:31. We should have mentioned this at 7:01, although Georgia Tech Duke is more important.
Of course.
John Martin and Courtney Rosen have the oddest story out of Bloomberg Law. The headline is federal worker layoffs climb toward 250,000.
Really?
Is deadline looms. Oh. And you go, well, how did they get that number? And it's brilliant what Martin and Rosen did. They go paragraph by paragraph, each agency.
Right.
And calculate what everybody's mouthing about.
Okay.
And it adds up to 250,000 people.
And
4,000 here, 1,100 there. And it's like 17 paragraphs of, hey, let's add up the rhetoric.
Right. I mean, I think most of us would say, yeah, the federal government's bloated. There's too much bureaucracy, too much red tape. I think most of us agree on that, but I don't know what that means in terms of headcount. And to me, it seems like, all right, headcount's fine. You can deal with that. But how about the big ticket items in our U.S. budget? You know, whether it be the Medicare, Medicaid, Social Security, all those big issues.
Yeah,
defense.
the budget's 14%.
Yeah.
The folks, a lot of folks don't know this. The budget that's flexible, fungible, cuttable, national parks.
Yeah. It's
Newark,
not that big.
You know, flight controllers at Newark.
Yeah, exactly.
Okay, 14%.
Yeah.
Of the public.
I don't know. It's headlines. I'd love, and we will see because they do track this. You know, the unemployment in the metro D.C. area, you know, Northern Virginia, Maryland, in the district itself. We'll see those numbers coming out over the next several months, and that can be pretty stark.
Eric Wasson, all-nighter down in Washington for Bloomberg News. Many of you have heard this who are wide into the news flow. The senator from New York, Mr. Schumer, he says Democrats will block GOP plan to avert shutdown. Like today, tomorrow, full moon shutdown.
Yeah.
Full moon's 3 a.m. tomorrow. I looked today.
Is that right? Okay.
It's gorgeous.
Very good.
Okay. I was going to sing like Christopher Cross. Lisa, would you like me to sing like Christopher Cross?
We'll pass.
We'll pass on that.
We'll pass on that puppy. Yeah. But we're near a shutdown.
Yeah, that's not good. You know, but I think that's where we might be going at this point. So, you know, it's the first time you've seen the Democrats just make a peep. Really, since President Trump took office.
Oh, they've been waiting for this. And we've heard that Henrietta Trace and others have been great about it, saying, you know, March 14th is what we're guiding towards. And that's where we are. We're going to give you more data checks. And today, finally, a calmer market. You see it in Bitcoin, 83,000 on Bitcoin, some stability there. The Sweeney yield, look at that. 4, deep into the 4s, 4.00%. On YouTube, subscribe to Bloomberg Podcasts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will U.S. natural gas production exceed 3.27 billion cubic feet in January 2025? At IBKR Forecast Trader, the yes recently at 9%. Check the data, spot the trends, and also start predicting today. IBKR.com/forecast. All right, we've got futures pointing to lower open. This is as the deadline nears for a possible government shutdown. Also, as the clock ticks towards the producer price index. It's about an hour from now, along with initial jobless claims. So we have a NASDAQ futures down 0.5%, Dow futures down 0.2%, S&P futures down 0.3%. The 2-year yield 3.99%. That's little change, and the yield on the 10-year 4.33%, and that's up 1 basis point. With the Bloomberg Dollar Spot Index is little change. Shares of discount retailer Dollar General, they're up 5% after its sales guidance was higher than expected. After the close, we move on to Ulta Beauty, so stay tuned for that. Microsoft in the headlines. The FTC is moving ahead with its antitrust probe of the company. It was open during the Biden administration. And then finally, Spirit Airlines. It met its goal to complete a reorganization by the end of this quarter. It emerged from bankruptcy protection. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. And now, focusing on foreign exchange and all the tariff dynamics we're trying to learn about each and every day, Audrey Child-Freeman joins us, Chief G10 Foreign Exchange Strategist for Bloomberg Intelligence out of Queen Victoria Street in London. Audrey, peso or loonie, which is the biggest opportunity for currency traders?
Well, in a sense, both those currencies are facing a similar dilemma and a similar conundrum, which is the tariff headlines. But for both currency, the price action hasn't really been at all what you'd expect to be in the past few sessions, where in particular for the Canadian dollar, we've had earlier in the week, a step up in the tariff debates and in the tariff headlines. And the Canadian dollar isn't really selling off anymore. It kind of feels like the market for the time being is putting that debate on the sideline.
So, Audrey, where are your clients, like the conversations you're having with your clients these days, where do folks see value out there in the currency market?
Well, I think, Paul, there's been a shift, a significant shift in perception over the past few weeks, in particular over, the euro-dollar view. That's been one of the biggest game changer. Initially, the trigger to that shift was mainly U.S.-driven and some slight question marks about the extent to which the U.S. Very strong economic momentum could continue this year, and that was triggered by the turn that we've seen in some survey evidence in the U.S. economy. And more recently, and that was last week, the big game changer for me comes from Europe, with the significant change and significant shift we're seeing from the Eurozone and in particular from Germany when it comes to fiscal policy. And that's really giving us, enough momentum here and very compelling bullish case for the euro compared to where we were like 2 months ago. So the debate has shifted dramatically from euro-dollar parity to now thinking how high can we push on this euro-dollar bullish view.
Yeah, that's the story, Julia. We've been trying to get the euro to parity for Tom Keene, but that's not happening. And now the question is, as you're suggesting, Julia, is how high can the euro go? When you talk to your clients, where do you think that is these days?
Well, first of all, I would say, Paul, when you say 110 to 115, clients don't look at you with a strange and puzzled way anymore. And I think that captures well the fact that, sentiment is changing and perception is changing. But I would also say that we've had a 7% rally in a very short period of time. We have the euro still undervalued versus the dollar. But, the question is, yes, we can talk about 115 to 120, but how fast and how greedy do you want to be? Nothing is a one-way
Right.
trade. What happens if the US economy actually ends up being better than what's currently priced in? Because for me, the main risk at the moment on the dollar bearish view is that there's a risk that the market is adjusting to what could be excessively pessimistic views for the US economy. And that's not a good place to be. We've been there before. And the US economy always ends up, surprising to the upside. So I'm a little bit cautious on that front.
Audrey, thanks for the commitment. Thanks for your publishing at Bloomberg Intelligence. Audrey Child-Friedman in London this morning. Futures deteriorate -21. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Donald Trump vows to take back what he says was stolen wealth as 25% tariffs on steel and aluminum imports go into effect. Trump says the U.S. would respond to the European Union's countermeasures against his new tariffs, raising the risk of further escalation in his global trade war. While greeting Ireland's leader at the White House, the president claims the EU has targeted American companies.
They have not been fair. They sue our companies and win massive amounts of money. They sued Apple, won $17 billion. And they use that for other reasons, I guess, or to run the European Union.
Russia claimed that its troops have driven the Ukrainian army out of the biggest town in Russia's Kursk border region. It comes as a senior Kremlin official said that a U.S. proposed 30-day ceasefire in the 3-year war on Ukraine would help Kyiv by giving its military a break. President Vladimir Putin visited his commanders in Kursk and wore military fatigues. Senate Democratic leader Chuck Schumer said his party would block a Republican spending bill to avert a government shutdown. Schumer urged the GOP to accept a Democratic plan to provide funding through April 11th instead.
Funding the government should be a bipartisan effort, but Republicans chose a partisan path, drafting their continuing resolution without any input from congressional Democrats.
The government is set to shut down Friday at midnight. Columbia University grad student Mahmoud Khalil remains in the custody of U.S. Immigration and Customs Enforcement, but has not been charged with any crime. The judge granted Khalil's attorneys more access to their client, who for now is being held in an ICE detention facility in Louisiana. Khalil organized pro-Palestinian demonstrations last spring at the university. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Dining yesterday, early lunch, overpriced omelet. That's how we roll. How about those eggs?
Yeah.
And somebody took me, I went to the Mexican timeout chair. All you do is talk about Canada and not Mexico.
Good point.
We
Good
go
point.
to Lisa Mateo, our diplomacy correspondent, just back from Chicago O'Hare. Help us, Lisa, here with what you learned in Chicago about Mexico.
I learned that from someone who works very closely with her, that Mexican President Claudia Sheinbaum, she listens to us every morning. She does.
Nice.
Before she gets her notes together from our show, and she goes off and she speaks to whoever she needs to go to. But she comes here first.
We say good morning to Mexico, and the person that stopped me in the restaurant's right. I've been an idiot on this because all I do is, can you fix the Montreal Canadiens? That's all I care about. Can I just state that, we're all like, our politicians are so dumb. She came out of Berkeley Lab, which is PhD engineering. Berkeley Lab is out like on the left coast. And it's like when I was a kid, it was like, the Lawrence Lab at Berkeley or whatever. And now Lawrence Livermore, this is different. The Berkeley Lab, she's heavyweight, Paul.
Seriously,
heavyweight
I know.
academics.
That's what I was just reading up on her, and big time. So anyway, it's good to have a fan, a listener down.
We say good morning to all, and
maybe she can come on the show.
Let's
make it happen.
Let's make it happen.
Ruin her morning, drag her onto the show, and I'm gonna, Michael Barr. How about my Spanish?
Oh boy.
See, I'm just scared because I know that the president's listening, and I mess up every day. So I am terrified now as she's listening.
To all of you south of the border, I promise I will start reading Mexico News Daily.
Yes.
Their English language juggernaut.
Say buenos dias.
Buenos dias.
Buenos dias.
Yeah, but if you say it, it's romantic and wonderful
Lisa
and
says it
lovely.
sounds
If I
good.
say it, I sound like an ugly American. Thank you so much. And we say good morning to all in Mexico and in Texas and on our border as well, really confronting the tariff challenges. Future, did we flag that enough? That was like selling Teslas on the White House lawn.
Exactly.
We say good morning to PPI data here. We'll do that within the hour, that business inflation. Futures negative 20. The VIX very constructive from a 28-ish into 24.50. And I'm thrilled to announce the Mexican peso 20.19 this morning. It's Bloomberg surveillance.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
And a good morning to you as well. A little bit of dollar strength here this morning. Gold I haven't looked at. Gold up $9. Oh my word, $29.56.
3,000 watch.
5.6. Yeah, that's a 3,000 watch. I'll go with that. Depending on news flow, we'll monitor the headlines. This morning, right now on the newspapers, Lisa, what do you have?
Okay, we have a big milestone for an American rock band. Listen up.
Trucking, got my chips cashed in, keep trucking.
Yes, it is the Grateful Dead celebrating their 60th anniversary. So in order to celebrate, they're coming out with a 60 CD box set of live shows. It's offered May 30th, Enjoying the Ride. That's what it's called. So word is Matt Miller already pre-ordered.
I know.
His
He's
copy.
a crazy fan.
But it represents like 20 shows from 1969 to 1994. 60 hours of music, 450 tracks in all. It's about $600. That's the cost of it if you have a CD player and you want to do that. You can get the downloads, runs you a little bit cheaper. If you want to go a little bit cheaper, there's a condensed version on CD and vinyl too. But it's the way for them to celebrate 60 years.
I can't convey the bootlegism of 1970, 1971. You'd go in, you go to the Sink or Tulagi's and try to get through the day, and then you knew you needed something to get back to the dorm. So you'd go in, everything was white. It was like cheap white cardboard. And you'd go in and get bootleg stuff. And the only one I know left who has a complete 1971 bootleg catalog is Doug Cass. No one else. My mother threw them out. What these smell like something. What is that? And we say good morning to Doug Cass, who has all his original bootlegs.
Yeah.
I love it. I love it. But yes, Matt Miller was very excited about it.
He's fired up.
He came to me this morning.
Yep.
Yes, he did. So, this next one. So this is from the Wall Street Journal. LVMH has named Bernardo Arnault's son to lead Italian fashion house Loro Piana. So this is an interesting setup because he's 30 years old. We're talking about Frédéric Arnault. He's worked in LVMH's watch division since 2017. He was his CEO 3 years later at 25.
Yep.
So Loro Piana, it sells about $2,000 sweaters and coats, but it's part of that fashion and leather goods section, which is huge for the company. So a lot of people are saying it's kind of setting him up to be the next in line. I mean, people are watching the careers of his 5 kids very closely. So they're saying this is like a big move and some big news.
I mean, it's got a 300 billion euro market cap. It's a big company. Holy
it's
cow.
a big company. It's been a huge success. I remember the day, I believe they took out a part of Loro Piana, and that was, in my mind, as an amateur, the first luxury transaction where everybody just stopped and said, are you kidding me? And now, 20 years later, 30 years later, here's where we are. So he's anointed to be the one of the X number of kids?
Sure, why not?
That's what people are saying.
Good for him.
But we shall see. There's 5
The
kids to
drama
go
will
for
continue.
it. Yes,
Succession.
exactly. Succession.
They won't. I called up Frederick's people. I said, can you come on surveillance? And they said, we're not, because you call it Louis Vuitton. I said, well, that's how I pronounce it.
That's how we do it every day. Okay, so the newest cruise offering is now on dry land. These are like Royal Caribbean. They bought a 17-acre piece of land on the Bahamas. So it comes with everything, but they're saying this is the new trend to go from, the dry land private beach clubs. But what the Wall Street Journal, the New York Times is saying is that there's some kind of backlash behind it because the people on the island are saying that they're tired of being priced out by foreign investors. It's taken away from local economy. So that's kind of the word and the banter back.
Quickly, we go to surveillance correspondent, cruise correspondent, Richard Truman. Richard, would you go on a cruise ship that was on land? He's going to Europe. He's doing
cruising Europe?
Yeah, you pick it up in Gibraltar.
Oh, okay.
And you go over past Malta and all that, and you end up on Cyprus, and then you pop up to Istanbul, and you come back.
All right.
Rich Truman, thank you for that wisdom. Lisa Mateo, thank you. It is the newspapers. If I'd known this, I would have played the Dead. We'll do better. The Beatles.
This time I will try to show that I'm not trying to pretend. I wanna go, but I hate to leave you. You know I hate to leave you. Oh, you. If you break my heart, I'll go, but I'll be back again.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, and Lisa Mateo. We welcome all of you in this hour, a conversation on John Farrow and Company with the Secretary of Commerce of the United States, Howard Lutnick. We're going to do that here in a bit. We've got good conversation. Lankanathathon to be with us here to get us to Secretary Lutnick. We do this with futures flat earlier. Paul, they're not cratering. We can't, we need to sell this.
No, we've got a little bit of red on the screen here. It's on the S&P is off about a third of 1%. NASDAQ off about a half of 1% here early in futures trading.
We'll have to see. And of course, the 2-year yield, we had a 4% print. Paul watching at 3.99% right now. To the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And this flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, we've got futures lower this morning. President Donald Trump ramps up the tariff war right now. NASDAQ futures down 0.4%. Dow futures down 0.2%. S&P futures down 0.3%. The 2-year yield, 3.99%. That's little changed. And the yield on the 10-year, 4.33%. And that's up 2 basis points. With the Bloomberg Dollar Spot Index up about 0.1%. Well, after that softer than expected CPI print yesterday, today it's the Producer Price Index, initial jobless claims. That's about a half hour from now. Now, Bloomberg Economics says U.S. headline PPI probably rose about 0.6% in February as tariffs sparked faster price increases. We shall see. Shares of Intel, they're higher this morning. This is after a change in leadership. They're up about 11%. Industry veteran Lip-Bu Tan has been named its new CEO to succeed Pat Gelsinger. And then shares of Adobe, they're down 4%. Disappointing outlook for revenue growth in the current quarter. And finally, shares of American Eagle Outfitters off about 8% after issuing a weak forecast. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. This is a really, really important interview. We're going to try to squeeze this in before we get to Secretary Lutnick. Lankanathathon with us with ECRI. The Economic Cycle Research Institute really on a theoretical basis gets us halfway back to McKinley and the Gilded Age. And so you got less of the modern data stochastics baloney and a lot more of just trying to look at cycles. ECRI, Geoffrey Moore saw tariffs. You people live tariffs.
We lived them.
How do you synthesize the new tariffs?
Well, with all of these big developments, new tariffs, other huge policy shifts or shocks that hit the economy, what's quite interesting to us is how do they impact the drivers of the cycle, which we are monitoring through our leading indicators of the economy. And so every month we talk about what are the leading indicators saying. Last year, resilient, sticky inflation. This year, coming into it, actually, December was kind of Goldilocks for a few months. Now the tarnish has come off, partly because the stickiness of inflation, partly because of a bit of a shift cyclically in the composition of the resilience of the economy. The services sector, which had been punching, out of the park for years, is easing, and you're seeing that. The manufacturing sector, which had been weak for a couple of years, is turning up even before these tariffs are hitting. And so you're getting commodity price inflation, you're getting some goods price inflation, on top of which we're getting the tariffs coming in, potential tariffs, right? There's talked about and then actual. And we'll see how they hit the leading indicators. Right. So far, so good.
So you walk in and we get headlines from the President of the United States. Paul, this is from the President, I believe out on Truth Social, I'm guessing on that. Quote, U.S. to retaliate if EU tariffs not removed immediately. Like, I don't know if immediately is before we get to Howard Lutnick, but
exactly.
We'll have to see.
Minutes.
Why don't you jump in here,
So,
Paul?
Lachman, we've seen, just this uncertainty in the marketplace. Yeah. I think we've kind of started to see it from corporate America. We had the airlines cut their guidance yesterday. Yeah. We had some retailers, whether it's Kohl's or today, we had American Eagle cutting their guidance. And it just seems like this uncertainty that's out there may be impacting the consumer a little bit.
It is. Well, look, to be fair, we've had a K-shaped economy for a long time. Yep. And that means the upper 20% of earners, and certainly those who own assets that are inflating, are doing okay. They're not strained. However, the bottom end of the K, lower earners living paycheck to paycheck, are extremely squeezed. And I expect that to show up in all of your earnings data. That has already been happening. That's not new. So now if...
Is it worser now?
We got it. Worser is a good word. We have to watch those leading indicators. They are easing. Look, I think there's a slowdown, but the mix is changing. I think the manufacturing sector is actually getting a bid globally, and you're going to see that making things confusing.
Are you changing your economic forecast here, or is it too early? Because obviously the concern is slower growth, maybe higher inflation.
Yeah, no, I would say that we were Goldilocks back in December, and now it's tarnished. Okay, the porridge is getting a little cold. It's not a disaster. There's no collapse in the economy here, but the composition of the resilience has been shifting. But it maintains. Look, we're a super tanker. Just because you have a headline that's pretty dramatic doesn't mean the super tanker turns around. Yeah. And we have to see those drivers of the economy shift, and they haven't shifted that much.
Now, we got to do this before we get to the Secretary of Commerce. This is, I believe, from our correspondent, Ann Hager in Washington. Quote, so I believe this is from the President. This will be great for wine and champagne businesses in the U.S. Can we stop the show? What's your favorite champagne?
I don't drink champagne.
You don't drink champagne?
No.
How'd we get together? Exactly. What's your favorite champagne?
Oh, I don't drink a lot of champagne. I don't mind.
Well, that's a step in the right direction from Sweeney.
I'll have it on occasion.
I'll go to you, Tom. What's your favorite?
My favorite champagne is Madonna's champagne.
Is what?
Madonna?
It's Dutz, D-E-U-T-Z.
You had an answer.
It's killer. It's fabulous. You get it right across the street on Ile St. Louis. Dutch champagne, and I would suggest respectfully
she might know.
To the President of the United States that Madonna and I agree there isn't an American champagne like champagne and champagne.
Look,
or Prosecco.
I defer to you on this, but I would point out that people who are drinking champagne aren't hurting. Okay, that's not what's going on here.
See, that's an equity clicking in right there.
That's not what's going on. It's the bottom half of the K that's really going to be hurting.
But to your work, to your cycle work, if a bottle of champagne goes from a cheap $42 up to $58, I mean, that's tariffs.
Yep. That's totally tariffs. It's a one-time shift. It's not. It's it's a step up. It's not inflation, rate of inflation changing, and we do have the services side of the economy coming off, and we shall see. I have to watch the future inflation gauge to see where we're headed.
Lakshman Achuthan of ECRI, thank you. And now John Farrow in conversation with the Secretary of Commerce, Howard Lutnick.
Doug Ford set to meet with the Commerce Secretary, Howard Lutnick. And I'm pleased to say that Commerce Secretary Howard Lutnick joins us now from Washington, D.C. Mr. Secretary, welcome back to the programme, sir. Always appreciate your time. If we could just take a step back and set the table, what are the stakes for today's meeting between you and Canadian officials?
Well, I think the stakes today, if you take a look at it from the big picture, is the United States said we need to have steel and aluminum domestically in America. In national security, you need metals to make bullets, you need metals to make munitions, you need metals to make everything. And Donald Trump is very focused on, let's make sure the key ingredients that are necessary to defend America are made here in America. And these other countries, they just don't pay attention. I mean, how many times do I have to say national security is important? And if you do like the EU and you respond by putting a tariff on Kentucky bourbon, which used to piss off Mitch McConnell, which doesn't really matter anymore, you got to wonder, really, do I have to deal with this stuff? But alas, we do.
Mr. Secretary, let's get to Europe in a moment. Let's just stay on Canada, and then we'll work our way to the EU if we can. For the Canadians, as you know, they've put tariffs on around $21 billion of US goods. Will that change your approach to today's meeting?
Well, I mean, take a look at that again. Let's take a step back. National security, we put a tariff on steel and aluminum to make sure the dumping countries of the world stop and we can build up our steel and aluminum in America. And what does Canada do? They put a tariff on sports equipment. I mean, really, this is just, it's tone deaf. Listen to the president. National security matters when he calls out things like semiconductors. He calls out pharmaceuticals. He calls out autos. These are things that matter to us as a country. And if you're going to respond to us with sports equipment, you're just not listening to President Trump.
Secretary Lutnick, how much are the conversations today actually about bringing up the negotiations when it comes to USMCA?
Well, USMCA, we set aside USMCA. So the United States made a deal with both Mexico and Canada that said if you have enough U.S. content in certain products or it's actually made domestically, they can trade between our countries tax-free. That remains intact. What is outside of that is both things that don't have that American content that are imported from other countries. So that has a tariff on it. And now the president has said, look, there are certain topics I need to have us make in America. And steel and aluminum is key. I mean, we all understand that. So why not allow the greatest country in the world, who completely feeds Canada? Canada exists, completely feeds off of the amazing economy of the United States of America. Let us build up our steel and aluminum so that we can protect ourselves. And by the way, we protect Canada. I think Canada's got 60 planes. Oh yeah, they're really going to protect themselves. They're the lowest investor in NATO. They totally rely on us, and yet they think they need to respond to steel and aluminum tariffs. I mean, everybody is so used to picking off America, so used to it that they can't even stop. Donald Trump is here to say we need to be treated fairly, and we need to be treated fairly now.
Do you think this approach, if you articulate this to the Canadians today, will help bring down the temperature?
I do. I think once you actually breathe and think steel and aluminum America needs steel and aluminum. I mean, if you respond like the British didn't respond, the Mexicans didn't respond, you have some countries that actually thoughtfully examine how they do business with us. And then you have people like the Canadians who are in elections. So you have no idea. You think it's about a trade war. This is their way of getting election votes. And the EU, you know, the EU has just so many years treated us so harshly. They just can't stop. Look, their tariffs are way up here and our tariffs are down here. How about relax? Let us balance it. We are your largest, most important trading partner. Treat us with respect, and let's get a little balance. And Donald Trump is out there saying balance, balance, balance. April 2nd, he's going to describe his balance. We're going to do it together. We're going to describe our trading policy. We're going to describe our balance. But remember, semiconductors, we need to have them in America. Pharmaceuticals, we need to have in America. Cars, we need to have in America. And steel and aluminum, come on. America, oh, and lumber as well.
And
These
wine
are
and champagne.
Important things for our national security.
And the wine and champagne, sir. Don't forget the wine and champagne.
Come on, that's just that. You know, if you make him unhappy, he responds unhappy. But come on, let's get back to the core basics here, which is a trading policy that says America has allowed the world to lean on us, to take from us, to grow off of us, and now it's time for a little balance. We've got a $2 trillion budget deficit. We want to bring certain jobs home. Let the president do the right thing for America. He will respond after we're done organizing things to make sure the world grows. But today, just remember, he's the president of the United States of America. He's not the president of the world. He's going to take care of American workers, and it is time.
Mr. Secretary, I just want to make sure that the audience is in on our little joke there, because they might have missed the post by the president a couple of minutes ago. So I'm going to share it with them and then come back to you in just a second. So the president of the United States put this out on Truth Social moments ago, said the European Union, one of the most hostile and abusive taxing and tariffing authorities in the world, which has formed for the sole purpose of taking advantage of the United States, has just put a nasty 50% tariff on whiskey. If this tariff is not removed immediately, the United States will shortly place a 200% tariff on all wines, champagnes and alcoholic products coming out of France and other EU-represented countries. So, Mr. Secretary, just to bring you in, I imagine you are aware of what the president said based on our conversation just now. Have you given the Europeans a warning on this? Have you given them a time limit to back away? Are you taking the same approach you did with the Canadians just a few days ago?
Well, I think the president has made it crystal clear that he finds this tit-for-tat really abusive and aggravating, right? His objective is steel and aluminum tariffs. Let him build his steel and aluminum business in America, because that's important. And then, you know, they say, okay, we're going to tax whiskey. And look, I find all this back and forth really off the topic. The key topic is rebalancing American trade. We're going to spend lots of time together, you know, but the president was totally annoyed that the Europeans did this. And so you're going to hear back from someone who emotionally cares about America. He cares about America, and he wants to take care of Americans. And why are Europeans picking on Kentucky bourbon
Secretary
or
Lutnick,
Harley-Davidson motorcycles?
Are you saying this is an emotional response?
It's disrespectful.
Are you saying this is an emotional response, or will we see 200% tariffs on wine, champagne, and alcoholic products before April 2nd, when the president says is the big one, and we're going to get the reciprocal rollout?
Well, the joy of my job is that Donald Trump makes the decisions, right? And the people around him, we talk to him and we advise him. April 2nd is when we do reciprocal tariffs. And he's called out these products. He wants these countries to respect him. And all of this showed you is that Europe and Canada do not respect Donald Trump and do not respect America's ability to build its steel and aluminum industry, which is vital for national security, whereas you watched Mexico and you watched the UK be pragmatic and thoughtful, and the way we're going to deal with them is going to be better. So These are just black and white things. Why would you put against steel and aluminum, would you say Harley-Davidson motorcycles and Kentucky bourbon? It's just illogical. I think the president is saying, look, I am going to respond always bigger and always stronger. We will talk together. You know, he wrote that tweet this morning. We will talk together. If that's what he wants to do, we will do that. But the answer is April 2nd, a thoughtful approach to reciprocity and national security of those products he's called out. We're going to increase our domestic production of those and have a reciprocal model. And hopefully when I talk to the Europeans, they'll realize that they should take these things down, cool these things out, and let's properly negotiate.
Do you have
after
plans to
April 2nd.
speak to your European counterparts today?
Of course.
Like who? Are you speaking to, say, Ursula von der Leyen or potentially some heads of companies like Bernard Arnault, who was also at the president's inauguration?
Generally, as the Commerce Secretary, I speak to the trade ministers. That's generally how it goes.
But a lot of companies also, and I know executives, have been calling you, sir. Is that not correct? They're looking for exemptions. Exemptions, carve-outs, fall squarely in the Commerce Department.
So let's talk about exemptions for a moment. Steel and aluminum tariffs went in 2018. And when we came back into power, the Biden administration had granted 490,000 exemptions. Imagine 490,000 exemptions to steel and aluminum tariffs. I mean, I don't know that our department could actually collate 490,000 Christmas cards, let alone 490,000 steel and aluminum tariffs. I mean, come on, it's ridiculous. So yesterday, what we did is we just got rid of all the exemptions. That's all we did. The steel and aluminum tariffs were already on. We just said, look, let's just build back our steel and aluminum industry in America to protect America. It's so logical. It's so important. Yeah. And then all we get, you get some countries who understand and some countries who just go right back to old school. And, you know, the president's going to deal with them with strength and with power. And he's remembered that they like to respond with just go after their wine and maybe they'll pay attention and listen. But the fact is, April 2nd, we're going to go, April 2nd, we're going to go with a reciprocity, thoughtful, global process.
Secretary Lutnick, it's going to take a while to actually get those tariffs in place after all of the appeals process, et cetera, after April 2nd. And in the meantime, as all of these discussions around tariffs continue, a lot of businesses are just halting investments. You're seeing consumer sentiment decline. You're seeing their spending activity decrease. Can you give them a sense of when they'll have certainty?
The opposite actually is coming true. You saw Apple, $500 billion. You saw SoftBank, $200 billion. Eli Lilly, $40 billion. I'm meeting a company today who sent me a note saying they want to invest $65 billion in America. The scale by which American companies are committed to invest in America and global companies
Secretary Lutnick, excuse me, what I'm talking about,
huge,
let me explain to you what I'm talking about.
Investments, and those are coming. Well, let me finish. These are huge investments coming to America. You're over $1.7 trillion committed in Donald Trump's first 50 days. Anyone who thinks people are uncertain doesn't understand what Donald Trump is saying. He's saying, bring your production to America and you will avoid all the tariffs. Come build in the greatest economy in the world, and you will avoid tariffs.
That's maybe long term, but what we're seeing in the short term is that small business confidence has fallen to a 4-month low. They say a high degree of uncertainty about what the regime is going to look like. They talk about increasing likelihood of having to increase prices in response to the tariffs. You're seeing this with respect to airplane tickets that are falling off a cliff as of February. I'm just wondering, when you take a look at these types of indicators, at what point does it become concerning to you?
The greatest deal maker who's ever lived is sitting behind the desk in the Oval Office. He understands that the best way to get our farmers, our ranchers, and our fishermen's produce and products in the rest of the world which they block it. I mean, India blocks our farmers. All these countries block our farmers. The way to grow it is to make deals with them where they have to understand the power of the U.S. economy is that you need to take our products. We want to unleash American ingenuity and the capacity to export. And when other countries put giant tariffs on our products, let's be clear. You can't go to Europe and see an American car. You can't go to Korea and see an American car. You can't go to Japan and see an American car, but you sure see their cars here. So the concept of Donald Trump saying, hang on a minute, you have got to be kidding. We need to unleash the American economy, and if we've got to teach the rest of the world to treat us with respect, that they've beaten on us, and they have abused us, and their tariffs are so high that they've got to actually treat us with respect, bring down their tariffs so that it's reciprocal. Remember, they will never live with us having the tariffs as high as they have them. So what they're going to do is they're going to bring them down. Let Donald Trump run this economy. He knows what he's doing better than any president who's ever sat at that desk. Let him do his job. There's going to be a lot of talking, but in the end, there's going to be the greatest growth economy America's ever seen. We are going to export, and people are going to build in America. Those two things are going to happen, and they're going to happen because Donald Trump's going to create fair trade. Start saying the word fair trade, because right now, trade in America, go look at the numbers, unfair. Europe, huge. India, huge. Right? China, the highest. There's no inflation in these countries. What there is blocking Americans from doing business there, and Donald Trump is going to break down those walls.
Let's talk about China. So we heard from a foreign ministry official in China who said this, that Beijing has done the United States a favor and Washington should have said a big thank you for all they've done to control drugs. And I imagine they're alluding to fentanyl directly. Mr. Secretary, I just wonder if the president has seen those comments in the last 24 hours and what his response is to them.
The president, as we have said, on April 2nd is going to take a holistic approach to everything. March has been the month to reduce the border and fentanyl deaths in America. And I hope to God China's reducing the production of the fentanyl ingredients that kill 75,000 autopsied Americans. And as the president rightly knows, that number is way more. We need them. We need China to stop making the ingredients, and we need Mexico and Canada to stop shipping them into our country. That is March. March is very focused on that. Hopefully they'll get down and we'll have a good reduced border. Obviously, that's so far so good, but we need to reduce those fentanyl deaths. And then come April, you're going to see us start to focus on lowering tariff away and increasing tariffs at home, so at least we get a little balance. If they want to lower them, reciprocal tariffs mean take them down, and we'll keep ours down.
Have they given any indication they're willing to do that? Because you've been ramping up tariffs over the last month on China. Have they given any indication they're prepared to do that? Just to stress test this theory, because tariffs have been ramping up on China over the last 10 years now. Any indication they're willing to actually step back and do what you're asking them to do?
You know, China is always a separate thinking. You know, the Chinese Communist Party thinks about things in a much different way than everybody else. And I don't know how they're going to deal with bringing these things down. I would like them to bring it down. They have a huge market. But remember, we consume more than 2 times what they consume. They have a big economy, but they're a production economy. They sell to us. They need to sell to us. We are the greatest consuming economy in the world. We are the customer that everybody in the world needs. Now, they've put huge tariffs in China because they're trying to build up their consumer production domestically, and that's where they stand. So you don't hear all of you talking about how horrible China is and all the inflation in China and all this sort of stuff. It's just not true. The fact is, America is going to build up its industries here, drive down tariffs there. I don't know what China will do, but my expectation is the whole world who trades with us will bring down their tariffs and allow our farmers, ranchers, and seamen, allow our production, allow our car manufacturers to export more and grow. We are looking for fair trade.
Secretary
Fair
Lutnick.
trade. Let's say it over and over again.
We got it. I think it could maybe be a bumper sticker for you. There were reports this week that potentially underway are plans for Xi Jinping to meet with Donald Trump. Are we expecting a meeting between these two leaders either in the spring or early summer?
I mean, look, the president runs his agenda, but from my perspective, when strong leaders meet each other, that is useful and effective for the world. But Donald Trump will make those decisions himself. I am focused on reciprocal tariffs. On April 2nd, I am not in the agenda of who President Trump decides he wants to meet.
Secretary Lutnick, we're just 2 minutes away from the latest indicator from the United States, which is PPI data and inflation read and initial jobless claims. You've talked about how the data that we are getting right now is Biden data. At what point does it become Trump data?
I'd say we fully wear the fourth quarter, and we may well wear much of the third quarter. But for fourth quarter, for sure. You know, the American economy, right, a $29 trillion economy. You can't take office on Monday and have the news media say, oh, look what you did on Tuesday. I mean, come on, that's so silly. So the real way the world works is, for sure, the fourth quarter is Donald Trump's quarter, and the third quarter, his policies start to really embed in America. So that's the right way to look at it. First and second quarter are Biden's sort of left behind difficulty, and then you see Donald Trump dig us out, build us up, and by the fourth quarter, you're going to see growth rates because you got all these companies committing to build in America, get their shovels in the ground because we get regulations out of the way, start to produce those jobs, start to bring back trade craft. You know, electricians who build giant factories, HVAC specialists who cool those, and then mechanics who fix robots. You've got tradecraft coming back to America. It's going to be amazing. We're going to have the greatest training program ever because we need to train our great workers for the AI revolution and the tech revolution that is coming, that Donald Trump is bringing to construction and development in America, and we need to train our people, and they're going to have great jobs.
So going forward, do you just look through all of this weakness? You've talked about how, and we've heard a sort of detox period, et cetera. Do you look past all of the data in the first and the second quarters as simply backward looking and look forward to what deals are getting done?
My job is to look forward to what deals are getting done. I'm going to bring in, because Donald Trump has created the policies for me, to bring in enormous investment to the country, $1.7 trillion so far committed. And we're going to put out a website and literally show these companies construction and manufacturing in America quarter by quarter to show this kind of growth. Remember, each trillion of this kind of committed construction is worth 1 point of GDP. So at $2 trillion, which we definitely will have, for sure, that's a half a point of GDP for all 4 of his years. So as that grows, you're going to see that growth come into our GDP numbers. Obviously not today. Someone says, I'm going to build $65 billion in America. When can they get in the past, it would take a year and a half to get the permits to build. Under Donald Trump, it's going to take less than 6 months. They're going to be in the ground this year, and the fourth quarter, you're going to see this power. So, yes, do I have to say the first quarter is surely Biden, the second quarter is Biden, but starting the third quarter, you start to feel some Donald Trump, and the fourth quarter, you will feel the power of Donald Trump's economy.
Secretary Lutnick, I'm sure you've seen this report in Politico. It says that White House officials, Trump outside allies are, quote, growing increasingly frustrated with you, sir, privately complaining about the close proximity.
You got to stop the fake news. Please,
hold on.
God,
no, I want to give you the chance, sir, to respond to this.
Stop the fake news. I don't want to respond. When you read fake news, okay? I spoke to the president last night. He said, why do these people write this fake news? It's just nonsense. Imagine Jameson Greer, who's our USTR, who works with me, and obviously, if you remember when the president nominated me, he nominated me to say, go select a USTR and work closely with him. Anybody who says this kind of stuff, these articles talk about the Council of Economic Advisors. They're not even populated yet. The nonsense that we have to read while people just are trying to be troublemakers where it's entirely fake news, I don't need to respond. Okay, I really don't need to respond. I speak to the president all the time. Our economic team is one. We are together as one. We get along incredibly well. We speak to each other all the time, including yesterday for an enormous amount of time, every day, today again. It's got to stop. I mean, look, these lousy, media outlets, they try to create something so that you'll talk about it. Think about it. They got you to talk about them. I don't even want to say their name. They don't deserve to be read because it's nonsense.
Out of respect for you, sir, we just wanted to give you the opportunity to respond, and in your own way, I think you have. Mr. Secretary, thanks for being gracious with your time. You've been very generous. Appreciate it. We've got to get some Biden data.
And John Farrow there with a fired-up Secretary of Commerce, of course, for New York. Howard Lutnick, always and forever affiliated with his. Cantor Fitzgerald, he's now serving the nation with President Trump. A bit of fire there, Paul.
Yes, absolutely.
It's like early in the morning, and we got some economic data out. I guess we'll do that right now. Futures improved, -20, a little bit less negative, -12 right now. And the VIX is my constructive number of the day, 24.37. From the Interactive Broker Studios, a Bloomberg Business Flash. Lisa Mateo.
And let's get right to that economic data. We'll start with PPI. Final demand will go year over year for February. 3.3%. That was a survey. Came in a bit lighter, 3.2%. Now, we just got the revision to the prior was 3.5%, revised up to 3.7%. Now, when you take food and energy out of the picture year over year, the expectation, 3.5%, came in at 3.4%. The prior, 3.6%, and that was revised up to 3.8%. We're also got initial jobless claims for last week. The expectation, 225,000, came in a bit lighter, 220,000. The prior was for 222,000. So all that said, we look at the markets. NASDAQ futures down 0.2%. We have Dow futures, S&P futures down 0.1%. We go to the 2-year yield, 4.00%, up 1 basis point. The yield on the 10-year, 4.33%, and that's up 1 basis point. We have the Bloomberg Dollar Spot Index up about 0.1%. Since we were just talking tariffs before, want to go to shares of EU drink makers because they're lower now. This is after President Donald Trump threatened to enact that 200% tariff on European wine, champagne, other alcoholic beverages. Remy down more than 3% in Paris. So just to give you an idea.
It's un-American.
Sorry. And then this is your interesting look at the banking sector. Okay, so first you have Deutsche Bank raise its bonus pool to $2.7 billion in 2024. Right, that's the most in a decade. 26% increase. Then sources saying HSBC placing some of its investment bankers on short-term retention agreements, cutting many of its vice chair roles. And finally, you have Reuters reporting Citigroup planning to hire thousands of staff in tech. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. I'm Lisa Mateo. That is your Bloomberg Business Flash.
Lisa Mateo, thank you so much. Greatly appreciated. Our economic indicators here with PPI and Thursday claims, always brought to you by Commonwealth. Join over 2,000 independent financial advisors. They are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Commonwealth.com, and we thank them for their support. PPI a mix, I'm saying, Paul. I got revisions.
Yeah, a little higher.
Elevated, but then we come in more quiescent, as you would say.
I like that. And then in the jobless claims, a little bit lower than expected.
Yeah, but certainly not the peak. And again, the Bloomberg, I believe Bloomberg Law article out this morning, summing up the presumed job cuts that we see off of Doge and other efficiency exercise of 250,000, which means it's a perfect time that if you're out of a job, where do you go? And you go to ZipRecruiter, their chief economist, one of our favorites, Julia Pollak, joins us right now. Julia, at ZipRecruiter, have you seen a change? Can you give us wisdom or perspective on this new job market with so many people so quickly out of work?
It is a slow job market. That is what I'll say about that. Well, there was a big pop in optimism in the fourth quarter. Our first quarter surveys of 2025 are now wrapping up, and what we're finding is that bump has disappeared. Job seekers are saying that in the largest numbers ever that their job search is going poorly. We have the largest share of job seekers ever with 0 offers. Job seekers have lost confidence that there are plenty of jobs available. So we have the largest share of job seekers ever, over 40%, saying that they're not confident at all that there are jobs available. So our first quarter survey is a somewhat gloomy one, I'd have to say.
And Julia, what do you think has changed here? Is it just some of the uncertainty that a lot of folks in the economy are feeling today as we try to figure out how these tariffs and immigration changes may impact kind of the environment?
So I see a continuation of what was happening before, right? We've had a 2-year slowdown in hiring.
Okay.
And I think that excessive spending, high inflation, high interest rates, they have a very long hangover. And many companies were saying, let's survive till 25, and they were hoping that inflation would be conquered and that interest rates would come back down to normal by 2025. That has not happened. So we still have inflation uncertainty. We still have interest rate uncertainty. And now, in addition, we also have policy uncertainty. So that is the picture.
Bloomberg surveillance folks, they commute across the nation from Julia Pollak's left coast over here to 99.1 FM in Washington, 92.9 FM up in Boston. Good morning, Bloomberg 1130 on a cold spring morning here in New York. On YouTube, subscribe to Bloomberg Podcast. It's our new way to discover us. Find that again at YouTube. Thank you for Google and YouTube for their support. Julia, when you just give me the litany of how difficult it is to get a job, your job at ZipRecruiter is to pull that over to the unemployment rate. We're having a raging debate. When is the when of, say, 4.8% unemployment? Is the when of that this year, or do you go out further into next year?
So it's possible we won't get there. And that's because we are in the middle of peak 65 with the largest numbers of Americans turning 65 every year. We're about 5 years of baby boomers aging out like this and becoming eligible for Medicare and for retirement. And then we also have immigration falling steeply. So one of the first things the president did was sign an executive order ending asylum programs for workers from Afghanistan, Nicaragua, Haiti. So those programs together accounted for about 500,000 immigrant inflows a year. And many of those workers got employment visas right away. That stopped right away. Other kinds of border crossings have stopped. And so the number of people who need to be absorbed by this labor market keeps falling. And so perhaps even with slow hiring, we won't see an uptick in unemployment.
Julia, thank you so much. Julia Pollak, that was riveting, folks. The beginning of that conversation with actually what they're seeing at ZipRecruiter was extraordinary. About
the tone has changed.
I'm going to rephrase. The tone has changed. Yeah. And what I saw there, Paul, was if you're out looking for a job, the percentage of people with 0 offers.
Yep.
I think, she was going, Julia Pollak fast, but I think that's what I got out of it is, well, what's amazing is we went out on this morning of wine and cheese, fromage, and champagne tariffs, and we tried to find someone who's tried every liqueur that Mr. Arnault has at LVMH. Joining us now, Robert Hormats is public service to the nation, just back from Paris. And of course, with all of this history, getting us at least halfway back to McKinley. Ambassador Hormats, thank you for joining us this morning. You got a piece of chalk in your hand. You're up at Tufts. What are you saying to the diplomacy students at Tufts University this morning?
Well, I'm saying basically that the process of reaching some sort of compromise moved a little bit ahead, in the last few days in the discussions between the U.S. and
Right.
Ukraine. But the critical part is that Putin started this war, and Putin is a critical element in reaching a truce and reaching a conclusion, a full peace. And it appears to me that what he is showing us by wearing his military fatigues and his rhetoric
saw that.
is that he does not seem to be willing to do any of the things needed to reach a compromise on the truce or on a peace. And the question is, what is the United States going to do vis-a-vis Putin? We've said the president said he trusted him. He has now demonstrated he's going to do his own thing. He's going to be Catherine the Great and Peter the Great, and a compromise with the United States or Ukraine does not seem to be in his cards, which means there's a major diplomatic problem with him, and we're going to have to address that. There's no way around
The
it.
distinction here, Paul, for me is the diplomacy of Hormats or Kissinger or others. There's a lot of silence. There's a lot of quiet.
Yep.
And as Robert Hormats states there, we're at a very verbal diplomacy right now.
It seems like it. Bob, so how do you think this is going to play out over the next several weeks and months as it relates to Ukraine, Russia, and U.S., and I guess not the Europeans?
Well, I had a long talk with the Europeans. That's another diplomatic issue that has to be confronted. The Europeans feel that they have been pushed aside, that they've not been included in the conversations. And the whole history of the United States strategically after World War II has been to work with our allies. The one thing we have that China and Russia both do not have are strong allies. And we're alienating them, and we're putting them, sidelining them. And I think this is going to weaken us in the long run vis-a-vis Putin and vis-a-vis the rest of the world. And very importantly, the confidence in our reliability to support our allies is diminished quite dramatically. All the Europeans I talked to said, can we have confidence in you? And I said, well, we have a history of being with you. And they say, if you're having a fight with your best friend and neighbor, Canada, how can we rely on you to support us, particularly the smaller Estonia, Latvia, Lithuania? Are you just going to toss them to the side? So credibility is on the line here.
Howard Lutnick with us earlier, the Secretary of Commerce, and now Ambassador Hormats with us, of course, always affiliated with the Kissinger Associates. We'll speak with the Ambassador. Jess Benton will get us to the 9 o'clock hour here on these equity markets. Paul?
So, Bob, how should we think about Mr. Putin here? One could argue he could come out of this stronger than ever. And is that something that the Europeans that you spoke with are concerned about?
Yes. I think that we underestimate how bad his economy is at this point and how many people he's lost. The only trouble is he lives in an information bubble. In authoritarian governments, information rarely moves up, particularly bad information. So he may not have a very good idea of actually what's going on in the battlefield. And a lot of Russians only get information from state sources. So they may not know, but the economy is in terrible shape. A lot of jobs have been lost. A lot of very good people have left. On the other hand, he does have nuclear weapons. And if we give him a truce, he's using this truce to further extend his power and his devastation in Ukraine. So that the Ukrainians are losing by the truce, even though we've pushed them into it. And we haven't pushed Putin to a very great degree at all. A little more sanctions, but he's going to be the one who's going to have to do this, and we're going to have to come up with a strategy to get him to do it. If he doesn't, then Europe feels even more and more vulnerable.
Your expertise in your wonderful book from over a decade ago is a basic ligature of our domestic economy and our strength as America with our the way we project on a foreign basis. And I don't want to go into it. We got Ernie Tedeschi coming up in the next hour from the Yale Budget Lab. I don't want to go into fiscal policy, but this is the arch question I think all of our listeners and viewers want to know. Robert Hormats, on your study of populism. So there was William Jennings Bryan. There was Huey Long in the 1930s. Maybe other populists along the way. Do you look at Trump policy, the Trump phenomenon, the Trump foreign policy, tariffs, and what we're talking about here is a one-off that the nation moves beyond after his public service, or is there a new permanence here to the populism of the grand old party?
Well, I think the populism is going to be with us for a period of time because there is income inequity in this country. A lot of people feel left behind by globalization and by technology, and I think you're seeing this in other parts of the world as well, that this is not a one-shot phenomenon. I think this kind of populism is going to be with us. And you're seeing it in Germany with the Alliance for Deutschland that did very well. Sort of very ultra-conservative populism is going to be with us.
Did the Washington consensus, let's be honest, I think I'm part of it. I'm certain Robert Hormats is part of it. Did we blow it because we did not set up a structured labor project like Germany did to protect labor, like they beautifully did in 2008? In America, with a Lockean individualism, said to hell with you down at textile jobs in North Carolina. Did we blow it 20 years ago?
Yes, I think we're under the illusion that there was a Washington consensus in the country when we had the financial crisis, and then when we had COVID, where a lot of people didn't get proper treatment because they were in poorer areas. We underestimated the fact that there was not a good distribution in terms of the benefits of globalization. Many people felt it was disruptive, that technology benefited a lot of people, but a lot of people were not included in this. And when it came to the financial crisis, the bailout was mostly for the banks and a lot of small stores.
Was the stimulus of the pandemic mostly for the banks, as you say it in a broad sense? Was it for the elite?
I think the pandemic actually, a lot of the stimulus went to other people. I think there was not.
It was a fair distribution.
I think it was relatively fair. There was a lot, and it was not as well monitored as it should have been. But after the financial crisis, the financial institutions were the big beneficiaries. The little guy in Kansas City or in Des Moines didn't feel he was getting his fair shake.
Paul, get one more in here, because I got one more before Hormats storms out of the studio.
Exactly. So, Bob, this is a president, this is an administration that puts America first in seemingly all issues, and a lot of folks support that. Is that how Europeans view it? Do they feel like they are really on their own at this point?
Yes.
Yep.
I think they feel, in part because they themselves became too self-confident. Complacency is, I think, a major problem that we've had over the last 20 or so years. And the Europeans felt they could get their energy, cheap energy, from Russia.
Yep.
The U.S. would protect them from a security point of view. They were, in effect, not really playing the role that they wanted to play in the global system. There's some very talented people there. Macron, I saw a lot of these people when I was over there, but I think the Europeans came to rely too much on the U.S. for their security and didn't do enough, too much on others for energy and didn't do enough. And on technology, they're simply not keeping up with what's going on in the U.S. So they need to, they want to pull themselves together. They know if they want to have a global voice, they have to. And I think now, if there's one thing that's happened, is that they want to do this, but they want to do it with the backing and the support of the United States. They want to be allies of the United States. They don't want to try to do it alone because they don't think that's good for them or for the global free world.
Okay. I'm upset. I think there's been a horrific job by the media of describing the path that the Rubio family of Miami took to get to this country 2 years before Fidel Castro. His mother going back and forth to Cuba, just trying to get the family out of Cuba, and he growing up with non-citizen parents, I believe, and really being, Rubio is the immigrant. What is your counsel to Rubio as Secretary of State, given this maelstrom?
I think my counsel would be that his family and my family and many families of people we all know came over as immigrants and helped to build this country. And I think that we need to have a fair immigration policy. It can't be helter-skelter as it has been. but there needs to be a recognition that immigrants have been critical and remain critical to this country at all levels, starting companies and doing regular day work that is critical to our growth.
How do you respond to the comments Secretary Rubio should resign?
Oh, I think that's not an answer to anything. I think Rubio is a guy who has been involved on global strategic and foreign policy issues and is a very reasonable choice for that job. I do think, though, that it's important that he have a strong voice, because I think he does, from his time on the Hill and his background, have an understanding of the global system, and I think that's fine. I mean, Trump should have a choice, and Rubio is a very reasonable choice for that job.
This has been hugely beneficial, Ambassador Hormats. Thank you so much. Robert Hormats, of course, with Goldman Sachs International for years, his service under Secretary Clinton to the nation. I mean, there's a lot going on there, Paul. I mean, this is you and I are grinding this out every day.
Every day.
And the answer is, if you step back from it, it's like, are you kidding? Are we living this? Whatever your politics as well. We got a Segui here, and the only way to do it is Sweeney's not focused, folks. He's looking at Georgia Tech Duke here at 12 noon. So we thought we'd do one better. Jess Menton joins now. Just more important than the markets is Texas A&M. I haven't looked. Did they play yet?
You know what? I'm going to be honest. I've been really focused on the markets,
you're
so
like us.
I should know this.
No, but
I've been busy with my my day job.
What are you looking at within the day job right now?
So I am actually looking at retail flows, because typically, especially in this market, obviously we've known that hedge funds have been, for the most part, selling even before we saw the correction start this year, obviously after the S&P 500 peaked on February 19th. But typically we saw hedge funds and institutions selling into that before that happened, whereas retail was still, sentiment was at extremes. But when you look at a lot of this data, and JP Morgan on their derivatives desk, Emma Wu compiles a lot of this really strong data when you can look at, because really the whole point is you want to see what's happening with retail, because at what point do they throw in the towel and give up? Because that gives you more if you're in a correction or close to one, sort of near that capitulatory point. So right now we're still seeing retail investors going in and buying the dip.
Have you seen Catharsis? I haven't seen it, but you're the pro.
Right. Well, I don't want to bring up the JP Morgan collar trade, because I know you love that so much, Tom Keene, and some of those levels. But of course, that's coming up closer to the end of the month. But the put level on that one, 55.65, is interesting, because we've seen the S&P a few times intraday this week cross below that and bounce back higher. But really, that just means if it's above that, dealers have to come in and start buying. But from a technical perspective, obviously below the 200-day moving average. But some technicians I've been talking to are looking at those January lows around 57.75, kind of to see if the S&P 500 can recoup from there. But we're still a ways off from that right now.
Yeah, I mean, I just was looking at a note from the Citigroup, their trading desk, and they were suggesting that we're not at the bottom yet. But they also, I kind of reading between the lines, I kind of felt like they feel like we're almost there. It's
my conversations are, because it would take something more significant in a shock to really see more selling at this point. And there's not a ton of puts below the 5,500 level. So that tells you there's not a ton of hedging below that. So it would be harder to see a more significant drop below that. So we could potentially be there. But of course, we still have a lot of events coming up when you're thinking about, obviously, the Fed meeting next week, triple witching next Friday.
Come on, do you believe in triple witching?
You know what? It's one of those things where it isn't a thing until it is, right? It's one of those things where, because we always talk about how, it's going to be this volatile moment, and then it isn't. But then, maybe next time around it could be.
For years, folks, like, people go, I mean, Chris Nagy, I'm like screaming at him.
Yeah.
Everybody's having a it's like Bart Simpson. They're having a total cow over triple witching.
It used to be a thing.
It used to be a thing.
But I don't.
It's not as, because of the rise of fractional trading and ETFs and things like that. It's much harder. You don't see as many swings, but when you have volatile months, then all of a sudden that's when people want to point to it as
from
something.
your distance, I mean, Belchunas is on top of this, but we can't get him in. He's in Philadelphia this morning. What do you see in ETF flows right now?
I'm actually glad you brought that up, because I was talking to my boss just about this, and I was emailing him back and forth. So I was talking to Ethan Seraphagus over at Bloomberg Intelligence, who's on Gina Martin and Adam team. He puts this together. So he was actually looking at how, even on an ETF basis, you're still seeing, especially with the Qs, people coming in and buying. But some of that might be skewed by Vanguard, just because they're in a position where they have to buy at various points. But they still, we're seeing inflows through this last week.
Here's a partial Initial score, Texas Longhorns 17, Texas Aggies 7. That was a football game last November. 3:30 this afternoon.
Oh, boy.
Menton misses the market close. We go from Duke, Georgia Tech
right Texas
over to
A&M.
Texas A&M.
I mean, hey, if I'm allowed to, get out of here, then.
How do you do that so Chris Nagy doesn't see you? Do you have like a TV on your desk where you slum right into the basketball game?
I mean, I'm sure maybe I'll have my headphones on and people will
Maybe.
be
That's
thinking I'm
good.
watching Bloomberg TV, but really I'm watching the game.
Tom, the A&M Aggies, they're ranked 14th.
They're
in the
14th.
country.
They beat Auburn.
6.5 point
Duke
favorite.
didn't
They
do
went to the College World Series last year.
Yeah, I know.
They played against
the
Texas.
Aggies are all over.
Yeah,
I mean,
there was some drama with the different recruiting from both sides of the universities when it came to after the World Series last year.
Oh, yeah,
so
that's right,
where
yeah.
they were trying to
Yep.
steal some of our coaches.
Yes, exactly.
So we'll see
I
how
saw
this plays out.
We should mention this too. I got yelled at dutifully and correctly. So we mentioned Ivy League basketball. Columbia in last place men's basketball. Columbia women are an act of God.
Yeah.
They're like they're not only in first place, they're in first place with style.
That's right. Don't
Is how I
sleep
put
on
it.
the other things that are happening when it comes to women's
In
sports.
Providence. You asked where's the Ivy League tournament? It's in Providence.
Yep.
And it's great. As you mentioned, the women's game is really coming on, and the leadership here, within Ivy League is
Well,
Columbia.
here we go. I mean, so for the Ivy League women, Columbia 22-5. They're playing Penn. That's Friday at 4:30.
Yeah.
And then in the other semifinal in the Ivy League is Princeton Harvard. So there you go. So that's Friday. NCAA Women's Ivy League hoops.
There you That's
go.
some
We're
of
all
our
over.
coverage. For those of you nationwide, really, for those of you worldwide, including Jess, we mentioned they're listening to us in Mexico City.
Oh, I love that.
So now I'm reading Mexico News Daily.
Yeah, I mean, I'm from South Texas, so hop,
Allegedly.
skip, and a jump away.
Yeah, no, but what's important here, folks, and Paul's and I are guilty of this. We get our things and we get something in our mind. I've been way too much, oh, Canada. I have not been fair and balanced on the borders.
Hey, we'll head down there. We'll do some shows down there from the DF.
We say good morning to all of you in Mexico listening to us today on our economics, finance, and international relations. Just Matt, thank you so much. See you at 3:30 when you're faking that you're listening to some market close as well. And, we'll just have to see on that. We're playing, we did the Beatles. Somebody said, go American. Paul, Revere and the Lads.
Okay. Early.
When you come back down, girl, still ain't feeling right. And don't it seem like kicks just keep getting harder to find, and all your kicks ain't bringing you peace of mind.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, and Lisa Mateo. In this hour, Constance Hunter will join us, and Ernie Tedeschi of the Yale Budget Lab. It's going to be a really important discussion on your fear of the debt and the deficit and how it folds into the American economy. We're on fire today. Ambassador Hormats with us.
Solid.
And Geoffrey Yu to start us off.
Yeah, I mean, Mr. Hormats just back from Europe, giving us a kind of boots on the ground feeling from what our European allies
How about
are
we
thinking
both
these days.
take Friday off?
Yeah, done.
I mean, I can I'd see it. We'll consider.
I know a guy. I'll talk
to our agents. Yep. The futures improved. -20. We're now -7. We had a quiescent PPI data out, and then we had jobs claims are sort of on trend as well. Your headline number is the VIX comes in. The tension of 28 on its way to 30 didn't get there. With the VIX at 28, 27 solid, we're in three big figures over the last couple days, 24.19 on the VIX. A 23 handle there would be very nice. Sweeney looking at the 2-year. Oh, it's come back in again, 3.99%.
Nice.
They're off the,
Yep.
I guess,
We'll
the
round up.
quiescent jobs and that. But, that's where we are. Let's get right to it from the Interactive Broker Studios. The Bloomberg Business Flash, Lisa Mateo.
Yeah, things changed a little bit. Now a little movement in futures. The latest U.S. data showed February wholesale inflation unchanged from the previous month. Meanwhile, initial jobless claims slightly lower than expected, 220,000. So NASDAQ futures down about 0.2%, but Dow futures little change. S&P futures down about 0.1%. The 2-year yield, 4.00%. That's up 1 basis point. And the yield on the 10-year, 4.34%. That's up 2 basis points. Shares of European spirits and drink makers, they are falling this morning. President Trump threatened to retaliate with tariffs on some European alcoholic products. So you have, for example, cognac producer Remy Cointreau down more than 3%, Campari off 3%, even LVMH, which makes wine spirits divisions, falling 1%.
That's Moet and Veuve Clicquot, I think. I don't drink it, but
all right, this is
it's delicious.
It's delicious.
Is it gluten free?
It is.
Veuve Clicquot is gluten free. It's good to know. Continue, Lisa.
You got it.
What's in your tang this morning?
Yeah, you don't want to know. We've got other stocks on the move this morning, too. For example, Intel, their shares up 13%. News that industry veteran Lip Bhutan, he's going to be named the new CEO, so they have new leadership there. Adobe down 6%, disappointing outlook for revenue growth. And then finally, American Eagle Outfitters off 6%. A weak forecast is a reason for that. That is your Bloomberg Business Flash. Paul and Tom.
We're going to do an audible here. Lisa Mateo, thank you so much. We're really advantaged to do this. She is with Columbia, where the women's basketball team leads the way. She is with New York University. You said they're rocking it in women's basketball?
And men's basketball. They're both good. But the women every year are like Division III juggernaut.
We have Ernie Tedeschi with us with the Yale Budget Lab coming up. And so with Constance Hunter, who's so good at Economist Intelligence Unit, the EIU, that we're really going to take a fiscal tack here. Constance, the fear that all Americans have, like, am I going to get a Social Security check in 12 years? Or as Heilbronner would have said years ago, the debt and the deficit. Are these legitimate fears that we have about America's fiscal structure?
So this is a really great question about fiscal space and what allows countries to some countries to have lots of fiscal space, like Japan, and what allows other countries to have very little fiscal space, like Argentina. Right? So theoretically, the United States should have quite a bit of fiscal space because we're the reserve currency, because we have deep and liquid capital markets, because we're willing to run trade deficits so we can run financial account surpluses. All that is being turned upside down right now, right? And if I could just say, I saw Secretary Lutnick on TV just a little bit before, and he was talking about $2 trillion of investment coming in. Well, what that means is that we have to have a trade deficit on the other side of that. The financial account and the capital account need to balance. And what does this have to do with the budget deficit? Well, we can, again, only run budget deficits if we're willing to have a financial account surplus, because we're going to need foreigners to invest in our currency, which is a good thing because we're the reserve currency. They want to hold dollars. But if we start to erode that in all sorts of ways, then our fiscal space shrinks.
So what is the risk to this economy, do you think, with what we're seeing coming out of Washington in terms of tariffs, in terms of maybe, I don't know, changes in immigration policy? Is there a risk to this economy stalling, maybe?
I think there is a risk that we hit stall speed, and just to get back to Tom's point, I mean, we do have the debt ceiling coming up this Friday.
Yes, we do.
and so this perpetual situation where we're not are we or aren't we going to fund the government? Will Republicans and Democrats come together? All that at the margin hurts our fiscal space. And then you add all this policy uncertainty. So when I look at policy uncertainty indexes, we're at highs we're still below the highs of the pandemic, but we're at highs we haven't seen in other normal uncertain periods.
You're too young to remember this. Paul's too young to remember this, but I remember the magic of 1992. And it was unique, folks. There's lots of think tanks and that, and somebody with a lot of money like Pete Peterson writes a check. The Concord Coalition, Pete Peterson, Warren Rudman, Paul Tsongas, who we lost way, way too early. And they invented our concern, and they articulated at the Concord Coalition what our concern is over the deficit. And what every listener is saying is, we've heard this like a broken record since 1992. What's different now about a catalyst to actually fix this?
So just as an aside, I worked on the Paul Tsongas presidential campaign because of that, because of his stance on fiscal policy. And I would say that I am definitely of the belief that you want to be spending on the right things that are going to yield growth in the future. And we shouldn't be running 6% budget deficits when we're in expansion.
We're going to do this with Ernie Tedeschi. The variable budget is 14%. I think, Paul, help me with the math here. That means 86% of the budget is untouchable. Is that right, Constance Hunter?
Yes, but I'll tell you, I think that there's ways to think about cutting costs in healthcare, right? And I'm talking using AI, using robotics. There was a great study in Japan, which, as you know, is the preview movie, by the way, for everybody in terms of demographics, fiscal space, everything, right? And so they have all these elderly people in nursing homes. They don't have enough staff to take care of them. And so they started using a number of different types of robotics to help this staff. And it reduced costs and improved outcomes, right? It reduced injury from the nursing staff that was taking care of the patients. It reduced injuries to the patients. And we need to start thinking about how are we going to solve this, right? If you look forward, we need to increase home health aides by 21% over the next decade. Now, these people make half the median wage. I don't see how we're going to do that without increasing wages or using technology to help us.
Interesting. Or maybe some immigration discussions there. I mean.
Yeah, but even then, I mean, these are not, yes, that's possible, but this is, there's always been resistance to that.
Yep, absolutely. Inflation, how big of a risk is that for you for a resurging inflation risk?
So we think that there obviously will be a step level change up as a result of, there will be a step level change up as a result of tariffs. That will intersect with demand, right? So if we have the economy weakening because uncertainty is causing firms to hold back on hiring, or it's causing consumers to hold back on spending, or it's causing firms to hold back on investment, right? If those intersect, right, then those higher prices are going to actually cause a bigger slowdown in demand and prices a year forward.
I have to cut you off because Tracy Alloway's in an Uber in Washington, and the Uber driver listens to us every morning. I mean, thank you, Tracy, for that big successful night for Tracy and Joe in Washington. I mean, Joe's in the Bentley.
Yep.
But maybe he's taking a Sikorsky even. But Tracy Alloway, to you and your driver, thank you for listening on 99.1 FM in Washington. Constance Hunter, thank you so much, particularly for briefing us out. Well, that's a wonderful vignette there on Paul Tsongas as well. Thank you much. With EIU this morning. This is a joy. I had a tantrum. I have a beverage of choice in my hand. And I went to our staff, the vast, as an intern, I think, from, Berkeley, what do I know? And I said, get Ernie. And so joining us now from the Yale Budget Lab, heavyweights on analysis of your debt and deficit, Ernie Tedeschi out of Berkeley and all the magic of PP&E there. We welcome him this morning. Ernie, let's just start with something simple. What is the Yale Budget Lab's distinction versus CBO?
So we are trying to do things that CBO is not doing in terms of fiscal analysis. Obviously, when you do fiscal analysis, you have to do a lot of the same things CBO does. But like, for example, one of the things we just released yesterday is looking at new ways of thinking about deficits and debt. So I think it's well understood that when deficits and debt go up, interest costs go up as a result. Interest rates, broadly speaking, in the economy go up. But we have a new report that tried to put that in terms of the normal household. So, for example, if there's a 1% of GDP increase in the primary deficit, which just so happens to be roughly the effect of extending the TCJA, after 5 years, for the typical mortgage, the interest costs on the typical mortgage go up by $600 to $1,200 as a result of that. And that's from crowding out and from the Fed reacting to counteract price pressure. The typical interest on small business loan goes up by $1,000 as a result of that. There's not a lot of conversation in DC about like those, Main Street household level effects from deficits and debt. So I think we really want that to be part of the conversation as well.
Do we need a Social Security Commission where President Trump, so he can be codified into American history, says whatever the commission comes up with, unlike the others, is binding? Are we at that point right now where to get away from 14% of the deficit, of the budget rather, we need to attract the attention to the 86%, and we need a Social Security Commission?
I mean, we have to address Social Security as part of the problem. Social Security has a trust fund. You know, it is supposed to be self-financing, and it's going to run out of money. It's probably not going to run out of money within the Trump administration. But I got to tell you, if they end up exempting Social Security benefits from taxation as part of this plan that they're doing, it might run out of money within the Trump administration. So we might need a Social Security Commission sooner rather than later.
So in the backstop of all that, Ernie, is just the economic policy coming out of the Trump administration seems to be tariffs, tariffs, tariffs. How do you frame that out in kind of just from a big perspective?
Yeah, so I guess fiscally, there are a couple ways of thinking about it. There's like a fiscal way of thinking about it, an economic way about thinking about it. Fiscally, the way I think about it is that what we've done so far, the 20% tariffs on China, that raises about $800 billion, maybe a little bit less over 10 years if you implement them. That's not nearly enough to pay for TCJA extension, even if you did TCJA extension for 5 years. And they really need more revenue to be able to offset the cost of TCJA extension. So what I've been telling clients is that's really one reason why we should be expecting more tariffs to come one way or the other. Now, not necessarily on China, although I don't think that's a bad bet, but somewhere they're going to try to implement more tariffs because you need $2.5 trillion to extend the TCJA for 5 years. They've already only raised at most $800 billion from tariffs. They need to go further.
Right now, across the nation, and good morning to all of San Francisco and particularly Berkeley. Ernie Tedeschi with us with the Yale Budget Lab. We say good morning on YouTube. Subscribe to Bloomberg Podcasts. Just a terrific show today. Thanks to our team for this smart conversation. So, Ernie, you're out at Berkeley, and I assume you had to, put up with Brad DeLong and, of course, the wonderful Barry Eichengreen at that. One of my books of the year, absolutely superb, is Two Animals out of Berkeley, Paul Pearson and Eric Schickler, talking about partisan nation. It's a definitive book, folks, from Madison to now, of the divide in this nation. Ernie Tedeschi, if we have a partisan nation, how do we get a fiscal solution?
It's a great question. I think you have to put people in a room. And I think a lot of this debate has to be removed from the cameras. And I think you have to go in with an understanding that there's going to be something on the spending side and there's going to be something on the revenue side. And I actually think if you do that, look, maybe I'm being Pollyanna-ish here. It's my nature. I'm a little bit too optimistic, perhaps, by nature. But I actually think if you do that, there aren't, especially with things like Social Security, which you brought up before, there aren't that many things you can do with Social Security. Like basically you can cut benefits and you can raise revenues, and you can't get too creative beyond that. I think that we can come to a solution. I think what holds us back is, the preening for the cameras and, the politics of it all.
We got to leave it there, but Ernie, one of my most famous charts in the Bloomberg years ago was a log extrapolation of what the rich people pay into Social Security. And Paul, it's rolled over. The rich people now are not paying into the Social Security fund what they paid in decades ago.
Really? Okay.
It's ebbed away.
Okay.
Maybe Ernie will do a paper on that. Ernie Tedeschi, one of our best. He is at the Yale Budget Lab, and we thank him for being with us. Special thanks to Constance Hunter of EIU as well for that fiscal moment. With the news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Donald Trump has threatened to enact a 200% tariff on European wine, champagne, and other alcoholic beverages, the latest escalation in a brewing trade war between the U.S. and the EU. The president, in a social media post today, said that he would move forward with the import duties if the EU does not repeal a tax on U.S. whiskey.
Did you say 200%?
200%.
That's un-American.
Loading up on my Barbaresco.
A measure would put in place to retaliate against Trump's steel and aluminum tariffs that went into effect on Wednesday. Commerce Secretary Howard Lutnick spoke to Bloomberg moments ago.
How many times do I have to say national security is important? And if you do like the EU and you respond by putting a tariff on Kentucky bourbon.
Commerce Secretary Howard Lutnick says that he will talk with EU counterparts today. There's word the White House is withdrawing the nomination of Florida Congressman Dave Weldon to be the director of the Centers for Disease Control and Prevention. Sources tell Bloomberg Weldon was scheduled to appear before the Senate Health Committee this morning for his confirmation hearing. However, it is said that his anti-vaccine views have garnered attention since his nomination months ago. Senate Democrats say they are not on board with the House-passed funding bill, increasing the chances of a government's shutdown. Senate Minority Leader Chuck Schumer.
Republicans do not have the votes in the Senate to invoke cloture on the House CR. Our caucus is unified on a clean April 11th CR that will keep the government open and give Congress time to negotiate bipartisan legislation that can pass.
A Senate stalemate could lead to a shutdown starting Saturday. Finally, representatives of President Trump's family are said to have held talks to take a financial stake in the U.S. arm of crypto exchange Binance. The Wall Street Journal reports, according to people familiar with the matter, it would put Trump in business with a firm that pleaded guilty in 2023 to violating anti-money laundering requirements. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Greatly appreciate it today. My head's spinning over all this.
Exactly.
I mean, I'm like waiting for the next headline to drop.
Exactly, we are. That's what we do here.
And frankly, folks, the way Washington L. Hunt, the great L. Hunt of, with the Wall Street Journal and with Bloomberg, L. Hunt once told me Washington time goes back to Madison to Washington. They don't wake up till 8:30.
Exactly.
Adams moved into the White House, and they didn't get going. They didn't stoke the fire until
no rush. But they get it once they get going. The news flow is fast and furious. That's for sure.
We'll see that at 10 o'clock. Look forward to that through the day. Our schedule here through the day, we're going to try to get through the next 45 minutes of good conversation here. And then we're going to get to Sweeney. And is Alex with you today?
Alex is here.
3 days in a row. Can't stand it.
Exactly.
10 to 12. And then at 12, we'll have Duke, Georgia Tech basketball.
Sure.
You pulled some punches. You got that coming in here.
It's no problem.
And, and then from 2 to 3 at the subway, Michael Barr and I start filling out our brackets.
And we're done by about 2:05.
I think last year was my worst year ever. Like the first.
I wasn't that far behind you.
64 to 32. I was see ya.
Scarlet Fu. I'm just kind of.
She works.
I'm going to do whatever she does.
She's she takes courses and.
Yep.
She watches YouTube videos. And
only thing I'm saying, I think Gonzaga is going to go deeper than
the Zags. Okay.
This is what an idiot I am. I'd asked Paul Sweeney where Gonzaga was yesterday.
Spokane, Washington.
I'm a loser.
Never been to Spokane.
We'll have to see. Futures improved, -20 now, -9. And the headline for me today is the VIX. I'm sorry, folks, 28 and all that angst. We're into a better, not a stable, but a better 24.25. Right now on YouTube, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the U.S. Consumer Sentiment Index exceed 70.3 in March 2025? At IBKR forecast trader, the yes recently at 29%. Check the data, spot the trends, and start predicting today at ibkr.com/forecast. We've got futures lower this morning. This is after more economic data. Wholesale inflation stagnated in February, and that was helped by a decline in services costs before additional tariffs were imposed by the Trump administration. On the labor front, fewer Americans filed for unemployment last week. So we have NASDAQ futures down 0.2%. Dow futures, S&P futures, they are little changed. The 2-year yield, 4.0%. That's up 1 basis point. The yield on the 10-year, 4.34%, and that's up 3 basis points. Some deal-making news. Couche-Tard, it may raise its offer for Seven & I if the company engages in talks, ruling out that hostile takeover attempt. And Samsonite, they said it's continuing to work toward a potential dual listing in the U.S. And finally, SpaceX in the headlines. It postponed the launch of a new crew to the International Space Station due to an issue with the ground equipment. That mission actually would have paved the way to return those 2 astronauts home who have been there for a year after planning to stay for about a week. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. That is your Bloomberg Business Flash.
And to be clear, that's a manned flight, and I believe I heard scheduled for tomorrow.
It is. It's rescheduled, yeah.
I mean, to me, there's like a huge divide between unmanned and manned.
Yeah.
Am I right on that?
Yep.
Yeah. We'll give you some coverage on that tomorrow. We'll see how that aligns. Is it out of Texas or Florida? I don't know.
I don't know where they go from these days.
Maine. is well. Paul insisted, when you have a Sweeney tantrum, you don't see it out on YouTube, but he says we're just not giving enough homage to number one. So today at Charles Schwab, Kathy Jones and Liz Ann Saunders are going to be going at 12:30 or whatever. Georgia Tech Duke, they're going to be going, where's Omar?
Exactly.
I mean, that's what they're going to be doing today.
I mean, Omar's going to be with me watching our Duke Blue Devils. Omar Aguilar, CEO and CIO of Schwab Asset Management, got his master's and his PhD at Duke University, so we know where he will be today at noon Eastern time. Omar, what do you tell your clients, the Schwab asset manager investor clients, about volatility? That seems to be the name of the game over the last several weeks.
Well, good morning. First of all, isn't this the best definition of March Madness altogether? Between what's going on in the markets and everything else, I cannot think of better 2 words to describe what's going on. It is totally madness out here. And yes, Cooper Flagg, it's definitely going to have probably the best few weeks that he has had in his entire life. He's only 18. It's just amazing. But we have had, obviously, a lot of discussions with clients over the last several weeks, even from the beginning of this year, about, what to do in these circumstances. And, we have done a lot of research here about behavioral finance. And this is a perfect example of behavioral finance, where the best thing to do is to try to think about the long term. Volatility in the short run and even in the medium term will obviously make people unease. It will create anxiety, and it will naturally try to just make decisions that are not going to be the best in that particular moment, because as we know, things can change from 1 week to the next week, and that's obviously the definition of volatility. So what we tell our clients when it comes down to volatile markets is, number one, this is a great opportunity to rebalance your portfolio in areas where you always wanted to rebalance, you didn't have the chance. There's always opportunities for tax loss harvesting, which is always a positive thing for markets. You don't necessarily have to move away your exposures, but you can actually replace them with similar type of assets that allows you to just create some tax efficiency within your portfolio. And then overall, the evaluation of high levels of volatility, I think Tom was talking about the VIX. Well, we know that now we're in a different regime of volatility, which means most clients will probably end up having more exposure to risk now than what we had a year ago. And just by definition, that is what we tell clients. Think about your long-term risk profile, and if there's a need for adjustment, try to do it over the next several quarters.
From the equity perspective, Omar, are you suggesting your clients get defensive? And I'm not sure what defensive means other than, strong balance sheets, strong free cash flows. How about that?
Yes, we you know, in periods of volatility, you know, usually we describe quality, and I know quality has all kinds of variations of what definitions are, both on the bond market as well as on equities. But yes, strong balance sheets, companies that generate enough free cash flow, companies that have, you know, significant levels of potential dividend paying, those are characteristics that tend to do well in these type of markets. And, you know, in general, as you think about even just going forward and what you might actually get in terms of income solutions and what you can have, you know, having higher quality biases is always good in the long run, but it's particularly do well in this period. The other thing that we do is, you know, try to understand, you know, the dynamics of what we call non-cap weighted opportunities. And these are, you know, indices or investments that tend to emphasize the fundamentals of a company as opposed to just the size of the company.
Let's come back with Omar Aguilar of Charles Schwab. We need to get the market open here, and that, of course, means Lisa Mateo.
Yeah, and it comes just as that inflation print starts to soothe. So we'll start with the S&P 500. Right now, down 0.1%, 8 points at 5,590. We go to the Dow, down 0.2%, down 99 points, 41,246. And finally, the NASDAQ kicking in down 0.2%, 51 points at 17,593. We have the 2-year yield, 3.99%. Little change. The yield on the 10-year, 4.33%, and that's up 2 basis points. As far as commodities, we have Brent crude, $70 a barrel, down nearly 1%. We have WTI crude, $67 a barrel. We go to spot gold, $2,945 an ounce. And we have the Bloomberg Dollar Spot Index up about 0.2%, with Bitcoin down 0.5% at just over 82,000. That is your Bloomberg opening bell report. All in top.
Lisa, thanks so much. Again, the VIX 24.16, I think, is pretty stable. Talk to us, Omar, about the drawdown of an index versus we're seeing much bigger average stock losses. Is that unusual?
Well, the stock dispersion this year has obviously been probably the highest we have seen in the last 5 years. I think, you know, in many cases, you know, the reaction from earnings earlier in the year, you know, was, you know, received in ways that created that intermediate dispersion, where a lot of those companies that ended up beating their estimates didn't get as much reward, but those that ended up missing their estimates ended up, you know, being punished, you know, much harder. So that dispersion started just fundamentally. I think what we're seeing now is that it tends to be more as a reaction of potential impacts from impacts in terms of earnings, and this, you know, is very traditional, especially when people are starting to speculate what will be the potential impact of earnings growth and profit margins in certain industries that tend to be most affected for the potential tariffs.
Omar, in the fixed income space, a lot of people are looking for a little bit of safety there in fixed income. How do you think about allocating to fixed income here, and how much credit risk do you take?
Yeah, well, this is the time where, you know, in fixed income, that the best thing to do is to try to just wait and see and try to keep your risk low. There is really no reason. Credit spreads are still pretty tight despite all the volatility, you know, which suggests that still corporate America still has very strong, you know, fundamentals and enough cash in their balance sheets to sustain, you know, more issues. But that, you know, as we know, as economic start to decelerate, that may actually change. So therefore, you know, if you look at the difference in yields when you have in terms of high yield or investment grades, you know, there's really very little in terms of what you can actually get for the risk that you will be willing to pay. And therefore, we suggest that there's really no reason to take additional credit risk. And in terms of duration, is try to keep closer to what, you know, the benchmark is, because right now you can have inverted yield curves 1 week, you can have, you know, very steep yield curves the next week.
Omar, thank you so much. Greatly appreciated. Omar Aguilar, he's with Charles Schwab. We'll be watching Duke, Georgia Tech today, I'm sure. I just saw what you were doing this. I was out on social, and I just happened to run across. They just released moments ago the new F1 intro, which shows all the racers at the beginning of the race. And I don't know much about this, folks, other than it starts in Australia this weekend and goes to Shanghai, I believe, the next weekend. But it's shocking how many new drivers there are out of 20.
Okay.
And how young they are.
Sure.
I mean,
everybody's young.
Everybody's young. The control room is young. I mean, I'm looking at a global technical director, and he looks young. But the one I'm watching is Kimi Antonelli, who's going to be with Mercedes. And, you know, he's been doing this for years, but he looks like he's like 17.
So we're going to do some F1. All right, excellent.
F1. I mean, it's ginormous. For those of you in America,
He's 18, Tom.
Is he really 18?
He's 18.
Thank you. I didn't know
Boom.
that. But it's like
does he have his driver's license? Is the question.
Yeah, really. It probably takes Uber. But the answer is Pharaoh's like expert at this, and I hate Pharaoh because he got me into this.
I know.
And what we don't understand is this is ginormous around the world.
And you know what, Tom? Investors can invest directly in this.
How?
FWONK, Formula One. FWONK, John Malone's Liberty Media.
John Malone owns Formula One?
Yes, he does.
I did not know that. We'll have fun with that. We're not going to do a lot. I mean, it's not like March Madness where everybody's glued to it. But anyways, Australia this weekend. Kimmy Antonelli, 18.
Born in 2006.
That's depressing. I can't talk. People think that's a good thing. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got uncertainty running high on Wall Street. Stocks lower to kick off to end off this trading week. Oh, it's Thursday. Gosh, I'm so lost in my days. You leave a day and you see what happens. My goodness. Let's get right to it. We've got the Nasdaq down 0.3%, the Dow down 0.1%. Same for the S&P 500. The 2-year yield 4.0%. That's up 1 basis point. The yield on the 10-year 4.34%, and that's up about 3 basis points. We have the Bloomberg Dollar Spot Index up about 0.1%. Shares of Intel this morning, they're up about 18%. This is after appointing a new CEO. We go to earnings, and shares of Dollar General up 3% after its sales guidance was higher than expected. Shares of Adobe taking a hit, down 10%, a disappointing outlook for revenue growth in the current quarter. And American Eagle Outfitters up about 2%, even though it posted a weak forecast. And finally, renting an apartment in Manhattan, well, just got more expensive. Miller Samuel Douglas Elliman. Are you ready for the price? The median Manhattan apartment records, $4,500. That was in February. Bidding wars in almost 27% of deals. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. This is just a joy. It is truly one of the coolest double majors in America. If you go, this is in Boston, across the Charles River. There's 2 schools there.
Really?
There's a school to the more downstream.
Okay.
It's called MIT, and there's
Heard about
another one upstream as well. And the double degree of biology with all the heritage at Harvard, going back to the 19th century. I've been in the labs there in the museum, literally, where they have the debris of the 19th century, and it's just absolutely world class. And then to wander over to economics and take the worst PhD in America with Lawrence Summers.
Oh, boy. She
survived. Louise Shaner joins us now this morning. We're going to do tax policy. What was it like doing a PhD with Summers? I mean, what is he like when he's got the piece of chalk in his hand?
I mean, he's great. He's brilliant. He's tough. But he's super smart. I learned a lot from him, and he's actually a very nice person on a one-on-one.
There's a great intensity there, and the intensity now in our budget debate. We just talked to the Yale Budget Lab. That's a school down in New Haven, Louise. We talked to the Yale Budget Lab about our debt and deficit. Let's talk about taxes. The stereotype is the previous Trump legislation helped people like Donald Trump. How do you respond to that?
I think that's largely true. I mean, it was a broad-based tax cut, but it definitely had higher benefits for the highest income folks.
There's a lot of folks, Louise, saying, hey, this next round of tax policy, if there is one, really needs to be pro-growth, particularly in a world where it seems like tariffs might be a threat to economic growth. What in your mind is a pro-growth tax policy?
So I think a pro-growth tax policy is one that would provide expensing for investment. So be pro-investment, but not necessarily a low corporate tax, right? So you could combine a high corporate tax and like very generous incentives for investment, and that would give you that pro-growth policy without necessarily benefiting, people who have stocks and old capital.
A hitter like you, Louise, I'm sure your 1040 is like 85 pages. So if we start with a simplistic, the French pay more taxes than we do, whatever, and you're in America, which part of our taxes due is most out of whack? Is it the corporate tax? Is it what we pay? I mean, all my investments are losses, but when Paul has a capital gain on Alibaba, is it the investment taxes, or is it our income tax that's out of whack?
Compared to other countries, why is it lower?
Not why is it lower, but where's the most, when you as a grizzled pro look at this, where is the greatest incongruous thing within the American tax system?
I mean, relative to other countries, we don't have a consumption tax. They have a VAT, and we don't have that. So if you were looking to like raise revenues and say, look, the situation isn't that our taxes are so incongruous, it's that they're just not keeping up with our spending, right? So we have an aging society, spending is rising, and we're going to have higher taxes to fund some of that. We can try to cut back somewhat, but with an aging society, you're going to have higher spending. And so really the question is, where should we be increasing taxes? And so people talk about a broad-based consumption tax would be pro-growth because it would not inhibit savings and investment.
Okay, I'll go with the VAT tax or whatever. We all could stand in line at JFK as we're checking out of the country. But we had a leader of Canada when they instituted a VAT tax years ago who literally lost his job. Is a VAT tax politically feasible in Washington?
I mean, right now, I don't think tax increases are politically feasible of any kind, really. I mean, we're talking about massive tax cuts that we're expecting. So right now, there really isn't the will to address our long-term fiscal challenges. And until the voters aren't going to punish people for doing it, I don't think we're going to see any progress on our long-term fiscal challenges.
Louise, we got to run. Look, please come back. I want to have a longer conversation next time. Louise Shaner is with Brookings Institute. We greatly appreciate this on taxes, which is something we haven't done enough as well. Dow negative 114 and the VIX here at 24.32. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Donald Trump threatened to enact a 200% tariff on European wine, champagne, and other alcoholic beverages if the EU follows through with a tax on U.S. whiskey. The EU is planning countermeasures to Trump's metals tariffs with duties on up to $28.3 billion worth of American goods. Commerce Secretary Howard Lutnick told Bloomberg the president was totally annoyed that the Europeans did this.
The president has made it crystal clear that he finds this tit for tat really abusive and aggravating, right? His objective is steel and aluminum tariffs. Let him build his steel and aluminum business in America because that's important.
Secretary Lutnick spoke to Bloomberg this morning. The EU will also begin consultations with member states to adopt additional lists of agricultural and industrial goods subject to tariffs. Former Department of Education employees are speaking out after the agency cut more than 1,300 employees that oversee student loans and financial aid. Among them, Joseph Murphy, a longtime management and data analyst whose job was terminated.
Not done anything else for a long, long time. And I'm 56 years old, suddenly belched out into a job market that has been, at the very same time, severely constricted and also completely flooded.
Murphy says he doesn't disagree that the federal government needed some restructuring, but how you do it really matters. Still, President Trump told reporters that the job cuts are necessary.
When we cut, we want to cut, but we want to cut the people that aren't working or not doing a good job. We're keeping the best people, and Linda McMahon is a real professional.
President Trump made his comments while greeting the leader of Ireland. A top aide to President Vladimir Putin said Russia wanted a long-term solution and not a 30-day ceasefire in Ukraine as officials arrived in Moscow from the U.S. for talks. The comments came as Russia said it expelled Ukrainian troops from a key town in the Kursk region. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. On TV, basketball, college basketball. Is it like everything else? It's in total chaos? I mean, MLB just walked away from ESPN. What's college basketball doing?
College basketball is still in pretty good shape. The March Madness brand is still very, very good, Tom.
Yes,
but
CBS, right?
And TNT and TBS, and it's kind of they split the package a few years ago. I don't know who has the final this year, but CBS. Thank you, Ari. So it's still a big, big business, but like everything else, Tom, more and more of that is going to be going to streaming services simply because that's where the audience is.
Yeah, well, you gotta believe Amazon and Netflix just have to step in here. I mean,
anytime they want. Anytime they want. I mean, I'm not sure when the agreement comes up for renewal, but like everything else, you're going to see it more and more on streaming. So because that's where the audience is going. So, but anyway, March Madness alive and well, and we start off with the conference championship.
Unfair question. Forget about the guy at Duke who's so good. I mean, nobody cares. He's going to be in the NBA in 6 months and make more money than God. At Georgia Tech. Are they getting name, image, likeness money?
Yes, but probably not like Alabama gets. So, but the answer is yes, and it's varying degrees. It is haves and have-nots. It has to be fixed. This NIL, this portal thing has to be fixed, and I think they will fix it over the coming year or two.
Yeah. We'll get Emily Graffeo, a name, image, likeness correspondent, here to give us an update.
I think UVA lost in round one.
Well, yeah, they barely got started this year. Dow, negative 155. We're on YouTube. Subscribe to Bloomberg Podcast. It's building each and every day. This is Bloomberg Surveillance. Good morning.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. I was going to go. I had to touch the blue Detroit Lions button here. I'm so rattled by the shutdown in Washington. Joining us now, surveillance shutdown correspondent Nathan Dean. Nathan, when Washington shuts down, what shuts down?
So the government decides what's essential and what's not essential. About 70% of the government is deemed non-essential, but things like museums, but more importantly, for those of us in the markets, a lot of the economic indicators that we're going to get next week, commitment of traders reports, very reports that traders use, that isn't going to happen. And so, even though from the market impact, there's really not much there, certain traders are going to wake up and find some of the data that they use for their positions just won't be there. So we don't think a government shutdown is going to occur. We're actually a little bit out of consensus on that. We're at a 40% chance. I just think that the Democrats are ultimately going to take this deal, but don't be surprised if they work through the weekend to get it done.
Does the Smithsonian shut down? Does Washington Monument shut down?
It does. And for a lot of the 8th grade groups that are here this weekend, they're going to be very upset. New moms trying to go see the pandas. That's not going to be open. But President Trump does have the authority to decide what is essential and what isn't essential. So there are a couple of people out there saying, look, President Trump may keep those museums open. We'll have to wait and see if the government does shut down.
So, Nathan, what are the politics here? If I'm a Democrat, I don't think I want the Republicans saying we shut down the government.
Yeah, exactly. I mean, that's one way to look at it. The other way to look at it is that a lot of the progressive side of the party wants to be seen fighting President Trump, and especially a lot of these DOGE cuts. So you're going to see more headlines over the next, I'd say, 24 hours, really pushing these Democrats to effectively shut the government down and be seen as the resistance against President Trump. But a lot of those moderate Democrats are like, look, this is not exactly the time that we want to try and bring up this discord. There's also a thought out there that if 70% of the government workers are deemed non-essential, Elon Musk and DOGE may say, well, look, if you're not essential, why should you even come back? So, it's one of those things where I think there's a lot of political blowback. And I do think that there's going to be a big shutdown sometime in the next 6 to 9, 12 months. I'm just not exactly sure March 14th is that date.
Nathan, why do the centrist Democrats care at all about what the far left says? Don't they know what the country's moved over the last several months? I mean, why do they even listen to them anymore?
Well, this is the debate that's playing, right now with Senator Chuck Schumer and, Representative Hakeem Jeffries. They're trying to create unity. And we saw this in the joint address to Congress. There wasn't unity. 10 Democrats actually voted to censure Representative Al Green for standing up in that joint address. So, this is what the Democrats are trying to figure out. Obviously, 2026 and the midterms are far away, but, they do have to figure it out fairly soon.
2 quick questions here. First of all, you're saying you think there won't be a shutdown even though Senator Schumer said what he said?
Yes. What I'm actually thinking will happen is that Senator Schumer is going to push for a 1-month extension. Republicans aren't going to give that. Look, the House Republicans, they're gone till March 24th. But I think what will happen is the Democrats will then ultimately vote for the vote to proceed, meaning they'll vote to end cloture, allow a vote to proceed, and then all vote no against it in the end.
My head's spinning. One final question. Nathan Dean, what in God's name happened to Purdue basketball this year? Would you explain that?
I gave up on them. I'm an A10 guy, so I saw Fordham last night. It's going to be a good season for the A10.
Do you think St. John's can get it done?
I think so. I think they're doing well, but George Mason's my team, so I'm going to have to root for them.
Nice. Going right for the local team.
It's good. It's title.
George Mason, right outside there, outside D.C.
Nathan Dean, our shutdown correspondent, surveillance shutdown correspondent. Thank you so much this morning. Seriously, folks, I mean, he's really pushing against the zeitgeist about 5 a.m. This morning, really into last night as well. I mean, this was late night stuff. I mean, Nathan, it's 9:58. He usually starts at like 10:15.
I know. He came in early for us. We appreciate that.
He came in early.
Exactly.
It's very... Very good. Down -200. There is a deterioration to the tape off the futures. The VIX goes the other way now, 24.71. I don't see angst out there, but what I do see is we're hanging on every headline. Stay with Paul and Alex here as we go through on YouTube and out there across all of America. The headlines coming in good. It's tax season. The Stones.
Once had me down under my thumb. The girl who once pushed me around is down to me. The difference in the clothes she wears down to me. The change